Oh boy, it's that time again. It's a Tesla earnings time. Oh boy. You know, it's kind of interesting, and I don't know if it's a good sign, but the day of earnings is the day we hear that, Tesla might be announcing their new, smaller mass production car with production slated for mid 2025. It's like, wait a minute. They don't usually make product announcements on earnings calls days, so is that a sign of something bad to come? I don't know, you tell me, but it's what some folks are implicating. So we shall see. Obviously, we got earnings coming out shortly here. I want to get the implied volatility up for y'all so you can decide where you want to sit. In terms of a potential options play. Quick heads up also, we posted a new House Hack update video. If you haven't seen that yet, it's at the House Hack Homes YouTube channel. Okay, great. So that's out of the way. So let's get into implied volatility for Tesla in case you're looking for an options play. And then we'll also get into the earnings estimates beyond what we talked about yesterday. So we'll kind of get the latest on this. So, whoa, volatility is mega low. So super low volatility right now. Remember, folks, options are easy, okay? Buy low, sell high. Buy low, sell high. Very simple. For volatility. Now, you could use like Alpha Query or whatever if you want to look up volatility or whatever, but the 10-day volatility right now is coming in at just 23.5, which is pretty dang low. You know what I'm going to do? Let's see here. Let's look at this. Tesla, and let's see. Fridays, you've got 26. Go for, what do we have here? Let's see. Looking at options for Tesla, you've got weeklies this Friday, and you've got weeklies next week. I usually don't do this, but I think it'd be funny. So let's see if I can pull this off. Unlock trading. Let's see, can we do it? Let's see here. Let's see. I want to look at what because volatility is really low right now. It's interesting. No, I can't get it to go right now. Dang it, I'm not gonna have enough time. Oh well, whatever. So I was looking at Tesla because it's pretty low vol right now, and that's usually a time if you wanted to play an options play, you could pull something off. And I think it'd be really entertaining, but whatever. We'll look at this. I do want to also mention that Ross, by the way, he was just on Bloomberg, and what I thought was wild was that you actually had the host not realize what the Model S Plaid was. And I'm like, what? What is this? So that was a little weird. I think she didn't hear him correctly, but I'm also kind of like, but wait a minute, y'all are talking about Tesla. How could you not have heard him correctly? This is not that hard. So I'll play that clip in a moment too, because it's somewhat entertaining as well. I will pull that up, and then we'll be ready and geared up here for this. There we go. Let's throw that in. There we go. Okay, cool. So we're gonna throw this up. This is Ross Gerber. I post this on Twitter. Ross Gerber hops on to Bloomberg, and he did an interview at 12:30, so about 20 or so minutes ago. Yeah, let me get this going here. There we go. X. Oh, it takes so long with the dual-factor authentication. Why am I logged out, Kevin? There we go. They added passkeys, by the way, which was really cool. Okay, here we go. So Ross. There it is. There's the clip. I'm going to show this on screen here. This is me in the office. And I'm like, oh, let's see what we got here. And listen to Ross.
You know, I'm actually really into fast cars, like really fast cars. So I drive a Plaid's fastest car on earth.
What's that?
What?
The Model S Plaid. I'm actually really into fast cars, like really fast cars. So I drive a Plaid's fastest car on earth.
What's that?
What? So I thought that was pretty funny, and I had to post that. I thought it was, quite frankly, hilarious. So anyway, I did that, and yeah, that's what you've got with Ross. Now, okay, let's see if we can actually run this through. I don't know. I think the mainstream media, they just don't really pay attention. It kind of blows my mind. So, okay, you want volatility because you're at low vol. So the stock price is 208. Let's go. We need liquidity though. Go somewhere where there's liquidity. Okay, and then go for, let's see, today, what day is today? Today's Wednesday? Okay, that's really entertaining. So let's go for, I don't know, Webull might screw us on this. Okay, I want to go for a straddle on this. There we go, I was able to do it from my phone. Am I though? Modify? Come on. You weenie. Anyway, that'll go through. So, okay, yeah, there we go. Okay, cool. So I'll send an alert in the Discord for the, just because it's so freaking entertaining. This is not financial advice. Don't do this. It's stupid. Okay, so we're going to call it stupid straddle for the lulls. Super low vol on Tesla right now. And then you would have to get a movement though. I'm surprised there's so little vol right before earnings. What's the expected for movement? Let's see. Oh, wow. Implied one-day move only 6%. Implied one-day move forward 6% with historic vol. At the lowest historic vol we've had on Tesla in, let me tell you. Oh, come on, Kevin. Press the buttons right. Okay, here it comes. Lowest historic vol. We were briefly at this level in December, briefly October, briefly August. We usually don't stay there. Let's go out to 2021. Yeah, I mean, we've hit, in the last 2 years, we've hit these levels maybe 4 times. This low only about 4 times in the last 3 years. 4 to 5 times in last 3-ish years. Interesting. All right. Okay. Posted. Finally. Okay, good. And cool. Yes. Okay, good. Now what? So now we have earnings to contend with. So earnings. Let's get into earnings. So earnings estimates. First things first. Let's pull them up. And then we've got the closing bell. We'll obviously hit as well. Closing estimates for Tesla. So now we've got so you want volatility, okay? If you're gonna like make a stupid bet on weeklies, it needs to move a lot because the theta decay is gonna be huge. So it's a total gamble, okay? Like you want to close this ASAP. Total gamble, okay? I want to be very clear about that. But it's for the lulz and for entertainment. I'm writing. Let me write that. Make it clear. This is a gamble. High theta decay. High theta decay. Okay. But again, for the lulz and the memes. Okay, so done. Earnings estimates. Minute left to go. We are looking at Tesla. Tesla. Earnings estimates today. And I know some other companies report too, but who cares? So we're looking at 73 cents of adjusted EPS, GAAP EPS 61.8, revenue 25.874, net income 2.6, and obviously we want those delivery numbers, so we're going to be pretty anxious to see what comes through with those delivery numbers. As far as other earnings, we've got IBM, we've got ServiceNow, and so on. Let's go ahead and grab the bell, and then we'll get into earnings.
Close above that level. The S&P goes above 4,900 for the first time ever. Doesn't look like we're going to get a close above that level.
And the Russell 2000 fails at 2,000 again. That's another one that's been in play for quite some time. So again, see if it's just maybe a stutter step or something worse.
We shall see. We can't wait for those earnings as well. The bell's ringing, which means those are moments away. Into OT now with Morgan and John.
All right.
Well, the Dow's weak. Russell 2000 a little weaker. S&P 500 still at record levels, but about flat. That's the scorecard on Wall Street. But winners stay late for earnings. Welcome to Closing Bell Overtime. I'm John Ford with Morgan Brennan.
Well, the communication services, energy, and tech sectors fueling what we did see in gains today. The Nasdaq 100 also hitting record highs, but investors are now set for a wave of earnings. Tesla, IBM, ServiceNow, CSX, Las Vegas Sands. Just some of the big names set to report results in just moments. Instant analysis of all the numbers that's coming up.
Yeah, and while we wait for those earnings to come out, let's bring in our market panel. Joining us now, Barbara Duran from BD8 Capital Partners and CNBC senior markets commentator Mike Santoli. Barbara, we're now maybe looking for individual narratives. I mean, even if the market can go.
All right. Let's see how things closed while we wait here. We are waiting for the earnings. They'll be out within the next 4 minutes. It's a big moment. I did go for a straddle on this, which means you either buy or sell. But I bought because the volatility is so low. I realize theta decay is very high, so I've got to really overcome. I need a big movement in either direction. Personally, I hope that direction is up, but I also have a straddle for down. Worst case scenario for the straddle would be no movement. That would be the worst case scenario, is no movement, very little movement. Probably as a long investor, no movement is better than a big down. So anyway, we'll see what happens. I think it makes it fun and entertaining to have like, it's like you just put some money on the casino, you know? Casino's open. So we've got after hours earnings. We're looking at ServiceNow's coming out as well. We've got IBM earnings. I'll be watching those, obviously waiting for the Tesla earnings to come out here. We have, let's go with, there we go. Okay, Tesla's up, ready to go. We've got ServiceNow up, ready to go. And I guess I could throw up IBM as well, so we have them. It's been a while since we've done earnings together, so maybe we got to do these more often. Bloomberg has a top live segment as well for Tesla. It's interesting. Despite noise to the contrary, U.S. EVs had a very successful year in 2003. U.S. passenger EV sales consisting of BEVs and plug-in hybrids grew by almost 50% year on year. Tesla's at the center of the U.S. EV story. Will it last? Dun, dun, dun. All right. Who knows? All right. Tesla's actually set for 410. That's interesting. I thought they always used to be set for 405. So I feel like there's like a little 5-minute delay there. Oh no, Tesla's out. It comes in gross margin 17.6. They were looking for 18.1. That's a miss. Total free cash flow, $2 billion of free cash flow. That beats, but revenue misses. Revenue misses at 25.17. The expectation was 25.87. Q4 adjusted EPS 71 cents. The estimate was 73. We've missed on a few things here. But definitely missed on a few things, but that cash flow number coming in really nice. Don't have the shareholder deck yet. We're waiting for the shareholder deck. Again, 73 cents adjusted EPS. The estimate was 73. Not that bad. This is not like a huge miss. It's definitely a miss, though. You've got margin at 17.6. Cybertruck production deliveries to ramp throughout the year. Okay, I need more info here. The slide deck, I don't have the slide deck yet, but I am getting the tape of this. So looking for more. 2024 vehicle volume growth will be maybe notably lower than 2023. That's to be expected. What's the number? Give us the number. One-time non-cash tax benefit of $5.9 billion recorded. Okay, did that non-cash would not have hit their free cash flow. So free cash flow coming in at 2.06 versus 145. That's pretty impressive. But so far, these numbers are an oopsie-doopsie on the missy-doozles. Waiting again for numbers, Cybertruck deliveries and production to ramp throughout the year. No slide deck yet. It's okay. We're waiting for it. Waiting for numbers. The stock's down 2.6% right now. Still no slide deck. It'll be here soon, though. They said 410, so it's really interesting the tape has it so early. We shall get it. Waiting. Okay, we know that. Tesla says 2024 volume growth may be notably lower than 2023. We already know that. Stock's now down 4%. If we get down more than probably 5-6%, that's when you start going profitable on the straddle. Obviously, one loses money, the other one makes money. The goal is that you make more money than you lose on a straddle option, right? Okay, come on. So, still waiting. Q4 cost of goods sold per vehicle declined sequentially. Okay, that's good. That should help margin. Oh, slide deck's out. Let's go. Okay, that just dropped. Finally out. Waiting to get through this in detail. 5 seconds. And we are in on the making progress on the next gen platform. That's fine. We're in. Where's the forecast? How many vehicles are we going to make? Let's see if we just quickly jump to where the number would be. 2.1 billion. Fine. I just really want the production number forecast. I don't know if they're going to give it here. They might give it in the earnings call. This is the full production estimate right here. Record production. I mean, if you add up the numbers on the right, I don't think you're going to get to Cybertruck all the way over there, and the carrot isn't going to help us too much, so that's not going to help us. Are they not giving us a number? Production forecast? Volume. There. In 2024, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023. Okay. So, it's 2022. Let's see here. What we want to see is 2022, we delivered 1.3. So if we divide 181 divided by that number, we were at 37% growth in 2023, right? 37% 2023 and notably lower. Okay, so no estimate. Not great. That's not great. We want to have an estimate. Okay, let's go to the top. I'm surprised. They're just not giving a number right now. They'll probably give a ballpark. But I feel like this is one of the first times we're not getting a production estimate here. So I'm going to write that down. No production estimate. That's weird. Not great. So let's pop that up. Okay. GAAP operating income, 223, 2.1 bill Q1. We've got one-time non-cash benefit for taxes, fine. We've got Model Y became best-selling vehicle in the world. Energy storage deployment growth of 125%. That's fine. That's growing from a small number, though. 1.2 million Model Ys delivered 2023, making it the best-selling vehicle globally. For a long time, many doubted the viability of EVs. Today, it's the best-selling vehicle on the planet. Energy storage deployments more than doubled compared to the previous year. That's 23 to 22. Fine. Gross profit of our services and other business grew to a $500 million profit in 23. Great. This is very interesting. The cost of goods sold per vehicle declined sequentially in Q4. How much? We want to know how much declined, right? So, next-gen production platform to begin at Giga Texas. Okay. Teams are working on the launch of the next-gen vehicle. Fine. Looking for more updates here. Disappointing quarter in terms of solar deployments. That's 41 megawatts, less than 25% of what Sunrun does in the period. We'll look at that in just a moment. Started rolling out V12. Well, they just did that like a few days ago, so maybe they needed something to throw up on here. I was really hoping for something with a 1 and the 8 in the front. We did not get that. We did not get the bottom in margin, which is unfortunate. No bottom in margin yet. It's not like a devastatingly lower number compared to last quarter, but definitely a miss. That free cash flow number's not propping them up. Okay, this is nice. This is good because you're approaching those BYD numbers again. We went through this in the last earnings report, And we actually wrote here about BYD on one of these pages. This is the last report. I have this saved and ready to go here. But where did we have BYD? Oh, I may have erased it. Anyway, BYD was has a slightly higher, better operating margin than Tesla at the moment. And so getting that operating margin up into the 8s brings you back to being competitive with BYD. So I'm going to make a little note here. BYD is in 8s. Okay. Do we have any? I wonder if we're going to get any kind of expectation of actual, what's it called? FSD take rates. Probably have to wait for the earnings call for that. We've got $4.3 billion of cash flow. I mean, this is beautiful right here. Capital expenditures actually lower. Fewer capital expenditures. I wonder if this is Elon, talking down that idea of, expanding into Mexico, but that's also not great. We want growth, and we didn't get a production growth number here. Hiding that growth number, not so fantastic. Obviously, we've seen reduced vehicle average selling prices, lower FSD recognition year on year due to FSD beta wide release in Q4 2022. What is? Oh, the comp. They're saying when the beta released, so this potentially created a high comp for them, which means take rates have not exceeded where we've previously been. So not great. We've got growth in vehicle deliveries, fine. FX impact was nominal. Operating income decreased, resulting in an 8.2 operating margin. Operating income was primarily impacted by the following terms: reduced average selling prices, increased operating expenses driven by AI and R&D projects. We've got lower FSD revenue recognition due to the wide release, the high comp. Cost of the Cybertruck production ramp. Well, they still increased their still increased their yes. Wait, that's very late. Okay. Yeah, whatever. Fix that. Okay, so lower cost per vehicle, including raw material. Okay. Fine. Let's keep going. So solar deployed. Still not a bottom in solar. Oh, it's so painful. It doesn't end. And the ramp of the Cybertruck to be longer than other vehicles. You've got regulatory credits. Automotive gross margin excluding regulatory credits, 17.2%. That's fine. So still, the bottom is close. I think that's kind of the way to look at it, right? What's this rate of decline? We've got the rate of decline in solar. It's just always a pisser, but it is what it is. You've got about a 16% decline sequentially here. That's a 16% decline. If I go 49 from 66, we're at about a 26% decline. So the decline is slowing, but then again, you were virtually flat here. I'm just going to call that a 0% decline. But then you went 100 to 67. That is, 67 rather. 67 divided by 100, I mean, it should be like 33. Yeah, okay, yeah, 33%. That's a 33% decline. So the decline roughly seems to be slowing for solar deployments. Not great. We did add a ton of superchargers. Remember, the Biden stimmy checks are basically going over here. I mean, we're at 5,952. Just in the quarter, we added 6.3% in the quarter. And that is for stations, not connectors. That's great. I mean, you are exploding the amount of what's it called? Superchargers that you have here. Let's see here. Okay. Total production, total deliveries. Okay, we already know this. That's fine. I need some more data here. But automotive gross margin, X regulatory credits, 17.2. Let's write this down. Let me look at what the suits are saying for a second. It's not bad. I mean, X credits, 17.2%. Okay, fine. It's not the bottom, but 17.6% with credits. The free cash flow not going negative is great. $2 billion of free cash flow. I mean, it's wonderful. This is like an insulative blanket, right? It's like insulation. We'll write that down. Let's see. Suits are telling us Keep in mind, if you haven't noticed yet, we did post a new house hack video. So if you want to know what's going on with my startup, I did post that a few hours ago. Just go to the House Hack Homes YouTube channel. Anyway, Tesla also notes that they have reached a natural limit of cost down of our existing vehicle lineup, given the amount of, natural limit of cost down. So price down? Given the amount of price cuts that they've engaged in over the year, does this mean future reductions in cost of the 3 and Y will be limited? Makes sense for the residual value of the vehicles. Okay, the limit down. Okay, so we're going to have to talk about that. Probably hear about that in earnings calls. Oh, here it is. Cost of goods sold per vehicle declined sequentially to slightly above $36,000. Even as we approach the natural limit of cost down of our existing vehicle lineup, our team continues to focus on further cost reductions. Okay, so they're basically telling you, like, the limit of how low you could get the cost of production for these vehicles might be about $36,000. And so even though you're approaching that limit, they're still working on trying to improve the product. V12, we'll obviously talk about that in the earnings call. Okay, eye-opening line in the Tesla slides. Energy storage. Energy storage, energy storage. Let me see that. Energy storage. What do we got here? Energy storage deployments. There it is. The growth rate of deployments and revenue in our energy storage business should outpace automotive. Yeah, well, the energy storage business, let's see how much energy storage we've got deployed here. You should be able to do pretty well over here. Oh, wow. Look at the storage deployed. Holy smokes. Is that all in the... Oh, these are the year-over-year numbers. I mean, that's a massive growth year-over-year. 14,724 gigawatts, 6,541, 2.25x on storage deployed. 2.25x on storage deployed. So what else here? Okay, we talked about natural limit. We talked about the storage. Tesla's less bullet. Let's see. Manufacturing complexities in the Cybertruck. That's right here. We expect the ramp of the Cybertruck to be longer than that of other models given its manufacturing complexity. Yep, agreed. Then you've got Tesla claims in its investor deck Tesla Model Y was the best-selling vehicle. Let's see. Okay. What do you else have here? Okay. Meanwhile, okay, we mentioned that. Tesla's profit is often boosted by revenue from regulatory credits. Income from the sale of regulatory credits was $433 million, down from $554 last quarter. Solar output was attributed to higher rates. Duh, super rate sensitive market, like extremely rate sensitive. Profitability in the quarter was negatively impacted by lower deployments and seasonal weakness in solar generation. Interest rates have remained high. Absolutely. Absolutely interest rate sensitive business. Okay. Next generation vehicle platform. Let's see what we have on the next gen. Here we go. Company is currently between. Now this is an interesting bullish line here. The company is currently between two major growth waves, the first one being the expansion of Model 3Y, and the next one being initiated by the global expansion of the next-gen vehicle platform. Okay. So, what else? Shares down about 3% now. The biggest drivers of profit generation in 2023 were parts sales, used vehicles, and merchandise sales, and pay-per-use supercharging. Well, I want to see that. Pay-per-use. Like, how much money are we actually making from pay-per-use? Like, the margins on this would be very interesting. Remember, the earnings call comes out later. The biggest drivers of profit generation in 2023 were part sales. What? Oh, this is in the services business. Okay, they're taking that out of context here. So we've got the services and other businesses continue to grow alongside our fleet in 2023. achieving record revenue and gross profit generation. The biggest drivers of profit generation in 2023 were part sales, used vehicle sales, merchandise sales, and pay-per-use supercharging. As our fleet continues to expand in the coming years, there's an opportunity for fleet-related services to become a more meaningful driver of profit generation. Fine. Okay, AI, released V12. Enhancing the driving experience, we also introduced the second generation Optimus robot, which uses Tesla-designed actuating and sensors. Okay. What else? Tesla. Cost per goods per vehicle declined. We read that already. Let's go to the end. Kind of bouncing around here a little bit, but that's okay. Reconciliation to GAAP, non-financials. Yep, I want to get the cash flow statement too. Stock-based comp. Stock-based comp in the year coming in at $1.8 billion. That's substantially lower than what they had in 2021. Deferred tax assets, so a little bit of a pump there. What else? I do want to see how that potentially impacted our actual net income, because if that boosted EPS, and EPS was an oopsie anyway, that'll be interesting. Yeah, quite possibly. See that over here? I mean, look at that net income. 7.9 of net income. And stock-based comp, 484 in the quarter. There's the deferred income tax. Yeah. Yeah, so that boosted EPS. Oh, so EPS would have been probably a chunk worse there. But I think that was also built into expectations. So let's see. What did they show on EPS? Days sales outstanding. Okay, so we've got a tightness here in days outstanding. Sales outstanding and payables outstanding. These have both narrowed. Okay, let's see. We've got cash of 29 billies, and we've got cash flow moving. We do have bills to pay of 14.9 plus 9. Puts us at about 23.4 plus 20 plus longer term debt, 2.8. Yeah, so we've got about 25, 26 of debt, 29 of cash. The cash pile is growing though. So I'll call it 29 versus about 24. Just quick math. Versus about 24. CapEx. That lower CapEx, I do wonder if this is going to have to ramp next year. I mean, the fact that they've got this kind of profitability during the ramping of basically you've got Optimus, you've got FSD, you've got Texas and Berlin. These are massively expensive projects. And then obviously, what about Giga Mexico, which I believe is on pause probably. But yeah, doesn't surprise me that you have basically a what's it called? You've got in the same quarter where we're seeing, oh, FSD 12 released. Oh, we've got the next gen platform. It'll be mass producing in 2025. Is also the day we kind of get a miss on all of the numbers, right? The numbers were a miss across the board. IBM beat slightly, 17.38 versus 17.29, and mid-single digit growth on IBM. ServiceNow beat 311 versus 279, and their forecast beat as well. So ServiceNow beats, IBM beats, Tesla doesn't. In fact, the headline is, Tesla results look pretty bad. They can't catch a break, huh? Let's see here. Lagger and the Magnificent Seven. Growth rates slowing, declining, blah-de-blah-de-blah-de. Okay, so reaction, stock down about 3.5%. I don't know if that's going to be enough to really push those options. So we'll see what happens with those. We won't know until AM when they actually recalc. What are we getting? Let's check Now really quick just to compare. Now's also down 1.9%. Not only is Now down 1.9%, but then let's go IBM International Business Machine, they're up about 5%. How about an Intel? Intel, 12 basis points. Okay, there's Tesla. So keep an eye on Tesla. Enphase actually flat. NVIDIA ends at 613. Interesting. Yeah, I've been calling them the Magnificent Six for a while. You can't really call Magnificent, them the Magnificent Seven when Tesla's like the only one that's not magnificent right now. Kind of wild. Tesla shares are typically volatile after results come out, and today is no exception. Well, I mean, 3.6% isn't really that volatile. I was looking for something bigger. But deployments have slipped after deploying 100 megawatts. Q4, it did 67, 66, 49, 41 for solar deployments. Yeah, solar deployments really slowing down. Probably indicates still not a bottom for Enphase. You probably really need those rates to start getting slashed. And it's just going to be a continuous wait. Natural limit down on cost reductions. We touched on that. Tesla's next wave of growth will come from the next-gen vehicle. A few details have been released. In 2024, our vehicle volume growth may be notably lower. Okay, everybody's going to be talking about that. There's no doubt about that. We are looking for... Cybertruck capacity being indicated at over 125,000 does not necessarily mean that we're going to be at 125,000. Yeah, so that's quite interesting. Okay. Let's see here. Okay. Okay. All right, what else? Nope. That's pretty good. Okay, I'm trying to get some more insights here. Not really anything new. Obviously, we can talk about this and consolidate this. Magnificent 7 can withstand Tesla 2024 warning. Yeah, well, we'll see about that. Stock's down 2.9%. It's actually, honestly, for like kind of just the bluntness of these results, which somewhat indicate, you know, you're still in the bottoming process. The only being down 3% is kind of wild. Just wait for Elon to start yapping, though. We'll see which way that takes it. So we'll see. Okay, good. Then let's go through this in a little bit more detail. Let's see. Okay. In 2023, we delivered over 1.2 million Model Ys. We read that. Free cash flow remains strong, 4.4. Focused on growth projects. Energy storage deployments reached 14.7. Saw that. Late December started rolling out V12. I want to see what they write over here. What's this footnote 6? Active driver supervision required. Does not make vehicle autonomous. Yeah, well, we know that. Okay, that's fine. V12 marks a new era in the path to autonomy. Well, I mean, the fact that V12, frankly, is this joining of video AI and end-to-end neural nets is pretty remarkable. The problem is, how does that translate to money? The shareholders want dollars. And realistically, it looks like the FSD take rate is lower because they're comparing to FSD, you know, what's it called? End of 2022 when they released the wide release for the beta. So that doesn't sound bullish. I'm going to write that down. It's not bullish on take. Not bullish on take rate. Their earnings call, by the way, it's going to be a hot minute before we get to their earnings call. Earnings call is expected to be, usually it's at 2:30. So I'm just going to verify that really quickly so we can see here. Tesla. I just want to make sure it's not 1:30. I wish it were 1:30, but it's generally not. It's generally 2:30. Let's see. Yep, 5:30 Eastern time. So we got about an hour until the earnings call actually begins. So I'm going to write that down. earnings call here at 2:30 p.m. So we'll leave that little note up there. If you have not yet, take the opportunity to listen to the House Hack video update for investors on my real estate startup. Pretty exciting update, and tells you a little bit about our strategy right now, where we're buying and what we're buying. And then also remember, we've got some new lectures coming out at the end of the month for all the courses. Most popular right now is Stocks and Sykes and the Gold course, with a price change coming on January 31st. So we still got some time. But again, let's zoom in on this. This, to me, this is not bullish on the take rate. So I'm not very enthused by that. I really think, and this is just my opinion, this vehicle, the FSD is too expensive. IMO FSD is just too much money. It is such a great product. It is a fantastic product. And it's gotten so much better. But it takes a lot for people to really be enthused by this, I think. Okay, so then you've got, if the current 3.6% decline in Tesla shares hold in regular trading tomorrow, it will be the stock's smallest post-earnings decline since mid-2021. Exactly. The stock had dropped after the results in the past 3 quarters, always more than 9%. That's what I was saying. Let's see. Okay, sorry. Not bullish on the take rate, FSD, too much money. And I've talked about this before. I think FSD really needs, well, like, you probably want to be around 4K for FSD. That's about what the market values these at on used cars, 3 to 4K. And frankly, that's probably where they should be on this. You know, people shouldn't feel like they're losing money paying $12,000 or whatever for full self-driving. Used to be $7,500, used to be $5K. It's just continuously gone up. I know the value is getting, like, the actual performance is increasing, but it's hard to convince people that, especially, you know, we're not, I wonder if we've had any comments here on advertising. Nope. Ads. I mean, maybe we'll see something on ads, but we don't. Something I want to do right now is let's compare this chart, the production chart, to the last production chart they gave us. So I'm going to take a screenshot of that. We're going to move it over to the last production chart, which I purposely saved up over here. So we're going to go plop it in and drop in the picture. So we're going to put the 2 productions next to each other. Oh my god. Ah, there we go. Okay. That was a funny little glitch there. Okay. So, boom. So right on the left, these are the Q4 numbers, and then this is Q3. So what's changed? Nothing. Nothing has changed, except they did not give us a production target, which is a little disappointing. So, interesting. Very, very interesting. Not having any kind of growth here. Yeah, Tesla's, let's pull up. I want to see, somebody's asking for Tesla's PEG ratio. Well, it depends what they say. I mean, Wall Street forecast right now is 31% on EPS growth. We got, yeah, Tesla missed 6 of the last 8 times on adjusted EPS. It's like, at this point, it's like, if you're a Tesla investor, you just got to be used to this. But I did want to write that down as well. That Tesla, the last 3 earnings, Tesla was down more than 9%. Let's write that down. Last 3 earnings, Tesla down more than 9%. It went into this pretty low vol, and it seems to be staying low vol so far, but we'll see. Anything can change. There we go. So this puts, if I annualize their EPS now, 73.2 times 4, yeah, brings us out to about $3 in EPS. Yeah, we really need that number up. The estimates going forward for Tesla, let's grab those. Tesla. Yeah, gross margin was 17.6, came in under that 18 we were expecting. Ex regulatory credits 17.2, still pretty good, but not what we want to see. Financial analysis for Tesla. We are looking at 3.08 for EPS for the year, with a growth rate still of 31% on EPS. Those are Wall Street estimates right now. So at $200, which is where the stock is roughly trading right now, $200, you are trading for 65 times earnings, divided by 31, puts you at about a 2.09 peg. So 2.09 peg at 31% EPS growth projected by Wall Street. Okay, so let's see if what they're saying over here.
Beat estimates. Joining us now to discuss is Evercore ISI's Amit Daryanani.
Oh, they're talking IBM. Okay, I was hoping that we'd have a little bit over here. Let's see here. No, their EPS growth is not divided by 50. Their EPS growth isn't 50. It hasn't been 50 for a while. And I don't see that happening either. Okay, cool. So let's go to see what some other commentary is here. We've got we delivered over 1.2 million Model Ys, making it the best-selling vehicle of any kind globally. Yeah, that is true. That's very, very interesting. I think it's shocking that Tesla warns of slower volume growth in 2024, doesn't give us a production number, and we're only down 2.6%. It's interesting. Interesting movement. Ooh, FSD numbers here. Let's go, and then cost of goods sold per vehicle. We've got some good charts in here. Yeah, let's look at these. That's going to take me a second. Here we go. Okay, so what do we have here? Cumulative miles driven with FSD beta. This is impressive. This is a lot of data. The problem is, again, we're just, it's this painful company where everybody at this point where it's kind of like, come on, man, make the data make money. Nope, not yet. Yeah, somebody says at open it'll crash 10%. Well, I guess the straddle will pay off if that happens. The straddle won't be profitable at only a negative 2% movement. It's like the worst case scenario. It's like your long position is down a little and your straddle fizzles because you didn't get enough volatility. Like on a straddle, you want it to exceed the implied volatility. The implied volatility was 6%. It's declined 9% in each of the last 3 earnings. Today we get 2%. Of course, the time I have a straddle on low vol. It's okay. Inverse Kevin. Cumulative miles driven with FSD beta. That was the top chart. This right here is COGS. Look, wow. How'd they get the cost down that much? Let's do a decline. This is great, actually. This is PCI deflation here. PPI deflation. Let's do some math on this. So, oh boy. I can't get this perfect, so I'm going to go 39.6. I have to spitball this. 39.6 turns into, call it 38.6. Okay, so I get about a minus 2.5%. Minus 2.5% between the two data points here. Now I'm going to go 38.6. That's the old number. And we're going to divide that by the new number of 37.9. I'm guessing on those numbers. Negative 1.9%. And then we're going to take that new number of 37.9. We're going to divide that, divide into that. We will divide, that looks like an even 37.5. That gives me about a 1% cost decline to here. And then we have 36.3. 36.3 divided by 37.5. 37. Come on. 3.2% cost decline. That's nice. 3.2%. That's actually pretty nice. Now, they're suggesting there's probably a limit here as to, how much this can go down. As they've mentioned, we're approaching the limit of about 36K. So we could probably go in here and draw a line. Let's go across. And then we should probably also talk about what should Elon say in the earnings call. You know what, we could, there's probably our limit somewhere on there. I could make that a better line. That's disgusting. How about we actually draw like a nice, thick, straight line? Oh, yeah. That's so much better. See, that's nice. That's nice. Very nice. Okay, so let's play a little Elon bingo, okay? Who wants to make Elon bingo with me? So we need a 5x5. So in order to achieve a 5x5, I need to make 4 lines. Okay. And we'll take suggestions here in just a moment as to what should be in Elon bingo. Here. 1, 2, 3, 4. All right. Elon bingo. Okay. So what should be in the middle? Like, the middle should be our freebie. So we need the Apple Saudi Aramco comment. We need that to come up again. We'll make that one of the boxes. But I'm going to make that an edge. We're going to make that an edge. We're going to make, let's go with, we need to do the 25% issue. He needs to walk that back, okay? So I'm going to go for, but maybe he won't because, negotiations with the board, right? Walk back 25% stock comp. I think that comes up. We need a production number. Oh, Bloomberg made Tesla bingo? Let me see if I can pull it up, but I won't look at it yet. Bloomberg Tesla bingo. Let's play Elon Musk bingo on the earnings call. Oh, it's like a pause. Oh, they have it. Okay. I'm not going to look at it, but I have it. We'll pull that up soon. So, Giga Mexico, absolutely. Yes, good call. I was going to say earnings call 2:30 p.m. here. There we go. I meant to keep that up. Production numbers are on the press release stated 1-2. No, that's for last year. That's not the forecast. So, Project Redwood. Yes. I'm going to make that an edge case because you know what I'm going to put right below that? This line. This is a famous one. Earnings calls are not the place for product announcements. Okay? How about an AI Day? AI Day 2024. That'd be kind of cool. AI Day 2024. Red Sea. I'm sure the Red Sea discussion is going to come up. That might come up from like Martin or something like that. So let's just put it here. Red Sea. We need a free bingo. What's a good free bingo? Interest rates. How about advertising? Is advertising going to come up? Advertising. That would be interesting. $25,000 vehicle. Well, if their cost for goods sold is approaching $36,000, that 25K vehicle would have to be substantially different. Let's see here. Hold on one sec. Okay. Okay. Hold on one sec. One more thing here. Okay, good. Keep going with bingo. So, okay. Then we have, let's see here. What else? 25K car, AI chips. Oh, NVIDIA. You know, NVIDIA would be good for bingo. Let's see what they say about NVIDIA. Production hell. Ooh, that's true. Ooh, Cybertruck deliveries. Okay, production numbers / estimate. And we got to get that. We got to get Cybertruck numbers. Yeah, that's a good one. Some of these are funny. So, yeah, Robotaxi's not close. I'll throw it over here, but I don't really think that's close. We're almost certainly going to get a V12 comment. Oops. V12. There we go. Almost certainly. Optimus. Yeah, we could throw Optimus on there. That's not bad. We'll throw that in here. Optimus. Ooh, Giga Mexico. Good one. I like it. I like these. Very good, y'all. By the way, if you haven't yet been joining every single day on the other channel that's linked down below, we do the Market Open live stream again. So if you haven't been aware, every single day, pretty consistently, 5:25 a.m. California time, I'm live for about an hour and a half doing the Market Open on the Market Open live stream channel. So if you like doing some of the stuff live, make sure you're there for that. So if you wake up in the morning, watch it, or just 2x it back when you wake up or whatever. It's a good group. Free. Cargo van. Ooh. That would be very bullish if they say anything about cargo, like van in general. Let's write that down. A van. I think that's pretty edge case. I don't think we're gonna get that. But Giga Mexico, yeah, that's this one. I don't know. I'll put other Giga outside Mexico. Okay, we'll put that one down here. So that's a Giga heavy column over there. BYD, yes, I like that. Okay, let's put BYD over here. Any kind of comparison to BYD, who does not give a hoot about FSD or autonomy. Dojo, I like Dojo. Do we do Dojo separately from NVIDIA? Yeah, I think so. I think that's fair. What about, did we say Red Sea? Red Sea? Nothing Red Sea? Oh yeah, we have Red Sea, okay. Good. Being between the two cycles of innovation, the two S-curves, right? Between two S-curves. I think that's a very interesting argument for why the stock is basically flat for 3 years. Got robots via Optimus in here. And, yeah, maybe, like, we got ads. We need maybe some solar. Solar talk would be good. 4680, okay, all right. But what about the 4680? Solar bottom. I'm going to put solar bottom in, and then let's put true scale for 4680. For 4680. And then now we're going to go to bingo from, okay. We're going to go to, oh, you know what we should do? We should play both of them. Oh, that would be fun. We'll see where we get bingo first. Kevin's bingo or their bingo. So let's think of two more things and we're going to merge these together. Marketing, we got advertising. Price cuts, that's a good one, Max. Yes. Price cuts. I need one more. One more. Oh, the rental cars, cold weather, those are both pretty good. Battery life, okay. Charging network. I like the idea of the charging network. How about Amber Heard? Okay. All right, Amber Heard. And we'll go with charging network / stimulus. Okay, we'll make it a combo. Okay, so here's what we're going to do. We're going to screenshot this, and then we're going to put this next to the Bloomberg one. So let's see here. How am I going to get the Bloomberg one over here? Okay. That'll take me a second. Doomburgers. Okay, here we go. Let's take a screenshot of that as well. Now I got a screenshot of both. And now we're going to merge them together. It's going to be glorious. Nobody's going to ever have seen pictures like this. Nobody knows. Okay. Standing by. There we go. And throw the image in. This way you'll be able to take a joint picture in just a second. This will be pretty cool. We'll have both in the same spot. We'll literally be playing double bingo. I kind of like that. And image. And then let's look at what Bloomberg actually thinks. There we go. Both bingo cards are on deck. We're going to put Bloomberg bingo right here. Kevin bingo right here. So we'll put MK bingo. All right. Okay. So let's take a look at some of the ones they got. We've got. So to clarify what we have. Oh, I have advertising twice. Okay, I got to kill that. I need one more. Somebody give me something. We need give me something that wasn't on the Roadster. Oh, the Roadster's not going to come up. Uber. Ooh, I like that. Uber's a good idea. Union's a little boring. I like the Uber idea. Let's throw that in. We'll be different. There we go. So we put that in twice. All right. Here we go. So, Bloomberg, or as I like to say, Doomberg, well, and us. Okay, so I think we're going to talk about Uber, Red Sea, AI Day 2024, Project Redwood, Optimus, Giga Mexico, a van. Earnings calls are not the place for product announcements, so those are a little contradictory, but that's okay. Other Gigas outside of Giga Mexico, Dojo, true scale for the 4680, version 12 FSD, interest rates, solar bottom between two S-curves. Then we're going to talk about NVIDIA, advertising, BYD, Apple and Saudi Aramco comment, Robotaxi. Then we're looking for charging network stimulus, price cuts, walk back on the 25% stock comp talk, Cybertruck numbers, production numbers / estimate. All right. Then we jump over here to the Doomburgers. The Doomburgers have audibly puffs joint. What? Has that ever happened on an earnings call? Audibly puffs joint. My goodness. Complains about the Fed. That's almost guaranteed. Demand for Teslas is unlimited. Okay, that's a good one. That's a good one. I like that one. I like that one. So I'm going to put little smiley faces by probable ones, in my opinion. So I'm going to say yes, yes. Digging our own grave. Not many people understand this. That's a good one. I like that. Okay, all right. All right. I think he got a little backlash on the digging his own grave thing. Full self-driving, something about crypto. Tesla is an AI company. Refers to Earth as a market, interrupts an executive, probably, insults a philosophical framework, Cybertruck, well, that's duh. Obviously, that's going to come up. DEI, next-gen platform production is hard, prototypes are easy. Yep, probably get both of those. Optimus, insults an analyst, angina. And then they gave a free in the middle. Oh, I never give a free. I should have done that. I should have taken a freebie in the middle. Okay. Nobody knows manufacturing more than I do on Earth. Nice. Energy will surpass automotive. Yeah. Quasi-infinite demand. Demand is higher than ever. Twisting words because they had high demand for a week after lowering prices. Yeah, true. Let's write down earnings call 2:30 p.m. PT. Somebody writes sexy Amber. Okay, sexy. DEI. Diversity, equity, and inclusion, I think it is. Population collapse. Hurts. A lot of y'all make babies. A lot of y'all talking about population collapse. Okay, no more price cuts. Elon will say he has a good relationship with the board of directors. Demand is higher than ever, but nobody can buy with these high rates. Yes. I'm selling stock this year. Oh, no. That would be horrible. Don't say such darkness. Coerced. Coerced has dark thoughts. Okay. Selling Teslas on Mars. Oh, goodness gracious. Comp package. That's for sure going to come up. Megatron. Tesla. DEI used to do ESG. Concerns about the economy. Okay. Somebody wants to hear Grok get mentioned. Buybacks. That's not going to happen either. There's no way buybacks. All right. Let's listen in over here.
Intel and Visa are going to headline another hour of earnings tomorrow in overtime, and we'll tell you who else's results to watch when overtime returns. Before we head out, though, a quick news alert here on Boeing.
Mikey says sleeping on the factory floor and pretends to cry.
Just announcing hearings to look into the root causes of safety lapses at Boeing. We think we know what that's about. No date has been set yet, but the announcement comes just hours after Cantwell met with Boeing CEO Dave Calhoun, who spent the day with lawmakers in Washington, D.C. We'll be right back.
Thank you for calling. Please hold.
Okay.
When you talk to your custodian, does it feel like you're not being heard?
Thank you for calling. Please hold.
That is extremely annoying. So somebody said, there's Mikey in the chat. Somebody here says fake laugh. Elon fake laugh. I don't know, he laughs a lot. I think he thinks what he says is funny. I think it's, I don't know, sometimes people think laughing at what you say is fake. And it's like, well, you gotta like, you don't agree with what you're saying. You're just like lying, you know? So what else? What else? Extremely painful. Ooh, that's a good one. Tesla outlook. 20 energy outlook for, okay, outlook for energy. Interesting. Lawmakers. I see no lawmakers. Maybe we'll get something, ooh, on, what is this? Insults Ross. No, I don't see that happening. Did you all see what I tweeted about Ross? Hold on. I'll pull it up again for the lulz. Who's ready for the lulz? Okay. If you haven't seen it yet, it's coming up. This is me in the office. We noticed Ross was on TV. Oh, I can't hear it. Hold on. Why can't I hear it? I will fix this. Stand by. Okay. Rip. I'll fix this. One sec. We just had it up and working, so it's... Oh, I see what happened. Okay. No problem. Let's disconnect from that. Went to the stupid AirPods. I'll tell you, the Bluetooth on the Mac, Bluetooth just sucks. I wish they could come out with something new. It's not Bluetooth. Anyway, here we go.
You know, I'm actually really into fast cars, you know, like really fast cars. So I drive a Platts, fastest car on earth.
What's that?
What?
The Model S Plaid. You know, I'm actually...
Yeah. What's that? They're on a call about Tesla. And he drives, I drive a really fast car, the fastest car in the world, the Plaid. What's that? Come on. Oh, you might notice a poster here on the wall. Check this out. There's a poster. What is that poster? Is it going to come into focus? What did you get done today? Oh, can you see it? It's right here where my mouse is. What did you get done today? Well, kind of cool. Kind of cool. All right. So what else? While we wait for Tesla, do we want to review ServiceNow or Las Vegas Sands earnings? I don't know. How about Diablo 4 being mentioned? Yeah. All right. Let's go. Let's go see. Remember, I'm live every day. The market is open now. And so, ServiceNow. ServiceNow reports 5-year alliance with Visa. We know that they projected stronger than expected growth. That's fine. Tesla's down 3% and Post right now. IBM No, there weren't really too many updates over here on these. Trying to see what other earnings we had. But it was a pretty rough one there with the lack of guidance, too. It just kind of tells you you're slightly in the poopy doopies. So then we've got... Fremont reaches all-time production record of 560,000 vehicles. Oh, that's pretty cool. We actually have that. We got a photo of Fremont here. This is Fremont. Oops. Right here. All-time production record of 560,000. That's pretty cool. Okay. What else do we have that we missed, that we haven't looked at? Some of the other pictures. Cybertruck delivery event. Lots of iPhones and smartphones. Cybertruck production line. Looks pretty dope. Megapack production line. Megapacks are pretty cool. Tesla wraps. Oh, this is probably juicing some of the service margins. Juicing service margins? I think so. Yeah, that net income on the right side is a little misleading because of the rise in the one-time deferred tax realization. We also want to throw in... Oh, let's do... How about we draw a little line here? Here's your 2023 in operating cash flow. And then free cash flow is the lower number here. The red bar. Which, that subtracts out your capital expenditures. Q1 is usually pretty low for free cash flow. So I wonder, are we going to get a Q1 hit? Right? Will Q1 get hit again? Question mark. Okay. Alright, we're now 29 minutes away from the earnings call. Stock down 3.2%. Somebody just joined the chat and is wondering if Tesla already reported. Yes, they did. Kathy tweeted. What did she tweet about? Kathy. Well, it says she tweeted, but I don't see... Oh, there it is. Reposted a video on Bitcoin research. Okay. What else? What is Saudi Apple comment? Saudi Apple is when Elon Musk goes, I believe... I don't make a good Elon accent, but whatever. I believe Apple or a Tesla will be worth more than Apple and Saudi Aramco combined. Which is funny because that could be really bullish, or it could just mean that Apple and Saudi Aramco are failing.
2022. So the question becomes, how much will they grow this year, Melissa? That's what people will be focused on, especially when the call starts at 5:30 from Elon Musk. Are we talking about a 10% delivery increase? That would get them up to 2 million for 2024. Are we talking about something a little more than that? The estimate on the street was for 2.1 million. It is that open-ended nature of notably lower that is certainly going to be front and center during the conference call, which begins in a half hour.
Yeah, if they can quantify notably lower, I feel like this is sort of, you know, the automotive gross margins ex credits was much better than expected. A lot of people went into this quarter thinking that's what it was going to be all about. And for 2%, 1+% beat, that seems significant. Also, free cash flow for the quarter, that was also significantly higher than expected. So you had sort of puts and takes in this quarter.
Absolutely. But everybody also went into this quarter, Melissa, assuming there would be guidance in terms of delivery growth rate for 2024. Nothing, and just the words notably lower, it leaves it open for interpretation. And right now, the Bears are interpreting that as bad news.
Yep. Phil, keep us posted. We appreciate it. Phil LeBeau. By the way, they say it will be notably lower because the team is going to transition to the next-gen vehicle platform. So that's the reasoning behind that, for what that's worth. What do you make of the quarter?
Well, first of all, just the stock's performance after hours, I'm kind of surprised it's doing as well as it is. I mean, that type of unclear outlook, but a negative outlook on top of, you can make what you want. You can twist the numbers. You're right. There's a lot to read into. But when you look at operating profit falling year over year, you look at 2 straight quarters where it's been under some pressure. You have some dynamics where they're saying, we are going to spend more on AI and robotics. And so the spend goes up at a time when earlier this week or last week when Elon Musk sent a bunch of strange tweets out there talking about how maybe he wasn't comfortable having AI and robotics as part of the structure if he doesn't have 25% control. All of this adds up to some uncertainty around some part of the business that I think was what we were willing to pay a lot extra for on the multiple. And so it's at a time when the growth part of the story, which like every Tesla bull will talk about that, is in question at a time when people are, there's some bigger issues. BYD, we know the headlines there in terms of which they overtook them as the largest. I don't think that's a big deal. And I think obviously the BYD cost structure and ASP structure, very different than Tesla. But it's not an easy time. Stock's already had a lot of bad news priced into it. I actually think the price action here is better than I would have expected.
Questions around the growth part of the business for Tesla, but also.
Well, I actually do think there's a high likelihood that, this was in anticipation of a bad report. So, like, how much lower do you go?
For no other reason. Right? So we don't know exactly when or how. Sometimes they delay and things take longer than they think. But I don't know, the more I've been thinking about Tesla and the EV slowdown, the more that I think they should be cutting prices. They should just be putting as much pressure as they possibly can on the GMs and Fords. You know how, whenever my husband and I watch one of those, action movies, they always leave the villain almost dead, but they kick the gun to the side, right?
He can't get it there.
He can get it, of course. He comes back, you have to kill him again. And I'm just wondering, are they really going to try to just step on the throat of...
By the way, this is a family show. You're talking about stepping on throats and...
I know. Well, I'm kind of worked up. I really think that's sort of what's going on here. And they're saying we can take the pain, we can afford it, right? The balance sheet's in good shape.
Plenty
we do have cash flow. And we ought to just, crush them
if they do step on the throat, then they give up the margins. And everyone was so...
But they're not giving up the margins, really.
They're not, though, yeah.
Automotive gross margins ex credits better than expected. Sequentially
better than expected,
better
but if they go next level, step on throat, Karen's streaming Netflix movie, then you're going to have a problem on the margins sometime in the future.
What if you have fewer competitors? Then you have room to price.
I don't disagree with you. I'm just saying the price action was nervous about margins coming in when they dip below 20. So if now they pop to 17 and they dip again, and then you say more share, it's still going to be a problem. I think Tim touched on the valuation we've been paying for AI. If AI leaves the story, what is Tesla worth without that? And is that full self-drive? Does he go do it somewhere else and sell it back to Tesla?
How can he do that, though? I don't understand how he would be allowed to.
Well, the share structure...
No, he'd get sued to oblivion. That's why he needs to walk back this 25% stuff, and I'll take AI somewhere else,
As someone, I felt biggest risks for Tesla over the years have been corporate governance related. I think it just introduces a lot more of that at a time when the valuation is tough.
What do you think, Katie?
The stock has been a real underperformer, so I think people were anticipating something like this, and maybe that's why it's not down as much as you'd think. But there's a key support level, 208 on the chart. Now it's below currently, but as long as that holds on a consecutive weekly closing basis, to us, that's actually a positive or sort of an incremental positive for a chart that already has lower highs in place. Neutral long-term bias, and of course the other mega caps look much better on their charts from a momentum perspective, so it's hardly the best of the best, but if it does hold that 208 area, it becomes somewhat compelling to us for sort of a counter trend entry point.
And when you saw the price...
That's an interesting line. Counter trend entry point is the bottom in.
90s, and that area is the October 30th level, 194 and change. That's probably real support in the name. I like it above Katie's safer 208, but you'd be willing to take a shot here against a 195 or so low. The main issue that I have is if they're introducing new models, you force people to wait for those new models.
Yeah, that's called cannibalization. Not necessarily. When people get the bug, they want a new car, they freaking buy it.
And then they were $15,000 cheaper in 3 days, 3 weeks. That just forces people to wait.
All right, for more, let's bring in Fast Money friend Gene Munster. He's a managing partner at Deepwater Asset Management. Gene, great to have you with us. What is your take on the quarter and your reaction to the stock move?
Melissa, this was the most sobering outlook that I have seen from Tesla when they talk about a step down, a notable step down in growth rates. I just want to put that in a perspective. The street was looking for 19% revenue growth in 2024 for this year, and they said it'll be notably lower than that. So it probably comes in at 10%. When I see that, I think stock's down 5-10%. That was my initial reaction. I'm surprised to see where it is. The reason why I believe it's holding in is twofold. You highlighted the importance of the gross margin ex credits. I would just add to that, that's the first time in a year that we've seen that improve. And so that is a surprise on the positive side, especially given the ramp of Cybertruck, some of that investment. And second, I think the stock reaction speaks to the conviction of shareholder investor base. And effectively, this comes down to a very simple question. Do you believe that EVs are the future? And if the answer is no, that you think that this is going to take 20 years to get to electrification and autonomy, then you believe the stock should be down measurably, meaningfully, 10% more on this news. But if you do believe in the future, then this punky, soft guidance that they're giving for this year is going to ultimately prove to be noise, because everything that Tesla's doing, building out this next generation vehicle platform, everything that they've done in their investments in autonomy, all of that is coming at a time where traditional auto is stepping back from these. And so that's the question. If you believe in electrification and autonomy, Tesla's actually in a better position longer term. And I think that the reaction to shares speaks to the conviction, long-term conviction that Tesla shareholders have.
Can you help us understand, Gene, what this next-gen vehicle platform is and what that gives Tesla in the long term? I mean, we may see that step down in volume growth this year, but on the other side of that, if we see increased efficiencies, if we see increased output, this could just, you could smooth this year over and see the trajectory higher.
You'd see an acceleration back potentially. I mentioned the 10% for this year, but next year could be 30% plus growth. And the specifically is that this is a lower price vehicle, likely around a Honda Accord. A typical Honda Accord in the U.S. starts at $30,000. That's below the average selling price of a car in the U.S. at $48,000. And it's likely going to be a couple vehicles. One is a lower priced car with a steering wheel, and then followed by a robo-taxi. And so that's what they're talking about. They need to build enough of a gap between the Model 3 and this lower priced vehicle, not to create some confusion. So this is going to be, again, a measurably lower priced vehicle and compete with where the sweet spot of the growth in the automotive market is today.
Hey, Gene, it's Karen. Thanks for being on with us today. So I've always had trouble with how do you value Tesla then? Put it all together. How do you come out with a valuation for Tesla?
So what I look at is where the revenues are going to be in 3 to 5 years. I want to revisit it after the call here, but think about what that revenue growth is going to be. I mentioned a step back up to 30%. And then I go and look at what other companies are trading at. The best comp is Apple. When it comes to hardware, software, services, I think that's most representative of Tesla. And so
it's like a 3-peg.
It's a 6 or 7 times multiple. And so when I put those two together, I can comfortably get to above a $1 trillion market cap for kind of that 5-year period. Again, I want to see what's going on with their commentary on kind of long-term growth. But that's how I get there, as I think about this as a revenue multiple relative to where the revenue is going to be in 3 to 5 years.
All right, Gene, we'll check in with you later. Thank you. Keep us posted.
Thank you.
Gene Munster conference call again gets underway in just about 18 minutes time or so. That next-gen vehicle, at one point in time, we thought the mass market would unlock all sorts of value. Mass market.
That's what it was.
It's going to be amazing. And here we are. When we hear about transitioning to that new platform, that's a negative on Tesla in the after hours. Why do you think that is?
If you thought that the Model 3 was kind of this Volkswagen for the electric vehicle masses, then yeah, you're disappointed. But if you're an investor, you're thinking about higher margin. You're thinking about the cars that they can actually build for a price that they can sell them for. So it's a fascinating time. Margin stability was what I think investors wanted to hear. Forget some of the unclear outlook in terms of deliveries and whatnot. But I think back to the stock relative to the market. It's great having Katie here tonight to talk about some of those dynamics. But it's underperformed the S&P by 35% in 4 or 5 months, like massively. Here we are. We talk about the Mag 7s, and this is a stock that I think is being treated. And I think based upon the headlines, I also think all of these headlines are good for Ford and GM, and I'm long both. So, of course, I want to believe that.
So you mentioned 208 as a level. What happens if it's able to hold that on a weekly basis?
So it would show a reaction to the oversold condition, and that oversold is actually more extreme in the ratio of Tesla versus the S&P 500, which is kind of intriguing, right? It suggests that this underperformance is overdone. So you would at least, at a very minimum, expect relative performance to improve, and probably to a pretty strong degree. Just maybe sort of the release of that news, right? People anticipating it, worrying about it, and now there's less uncertainty, and the market tends to like that. But that 208 level to us preserves the range. So if it breaks down, then we're looking probably much worse than the October lows, I would imagine.
Wow. All right, let's get a check on the markets now. The S&P 500 notching another record close today. The benchmark index topping 4,900 for the first time ever. The Nasdaq also higher, while the Dow shed about 100 points. Meantime, Bank of America out with a bullish bank call today, saying the stocks may be this year's coiled spring. The firm noting Wall Street's exposure to bank stocks is lower now than going into the last year, and that the group may be due for a re-rating. The S&P Bank and regional bank ETFs both gaining about 1%.
Yeah, okay. We're going to pull off banking here for a moment. I want you to see Pierre. He is always on the earnings call. I don't know what I'm doing. But anyway, Tesla earnings. Let's get straight to what matters. Adjusted for credits and lease accounting, COGS, that's cost for goods sold, are down 3.2% sequentially. Now, understand what sequentially means. It means over quarter over quarter, right? So you could see that a little bit more clearly if I click on this button right here. This is their slide deck and summary updates. One sec. I'm just making a little comment here that I've got this slide deck with my annotations at ehack.com for free. Always free. Always free. There we go. We really like eHack. Hopefully you do as well. So go check that out if you haven't yet. But yes, lithium prices are down a lot. That's helping us, probably helping this. And lithium contracts can take a little while to lag through. Let me see lithium prices. Let's see when we've had our latest price declines on lithium. We'll go week chart. We're looking at the greatest declines in lithium occurred. I mean, quite frankly, it just fell since June. It's like straight down. But, well, I mean, even if you add in the bump, I mean, you're straight down really since about the peak in November of 2022. So lithium prices are plummeting. That is a good point. I'm going to I'll write that down because I do think that's a good point. Let me throw this, and then I want to make sure you can get that full slide deck because I'm not sure if it has cached yet. But that is a good counterpoint, so I like that. Lithium prices have fallen substantially from their peak in November 2022. For comparison, they are down, that's 597,500 divided by, now we're down at 95,000 for a unit, 95,000 divided by, yeah, we're down about, what is that, 84%? Wow. Lithium cost down 84% from peak. Lithium cost down 84% from peak. There we go. Okay, cool. So, refresh and clear cache. Okay, cool. So you should now be able to see the full eHack update. Take a look at this. When you go to eHack, you can see the lithium prices. And then I'm writing the summary now. You could also see some other links. Link to this post, the video stream that we're on right now, the annotated earnings deck. And then I also put just a quick little link. Big house hack update is out. Scary, but exciting. So in case you're interested in what's going on in the real estate world at all, that's over there. Anywho, let's see. We're getting close to the earnings call time. We're about 12 minutes away now, which is exciting. We are, let's see, we'll go with 14, 10, there we go. Let's do some other summary items while we wait to get this in here. We've got lithium prices down. We know gross vehicle margin 17.6%, gross vehicle margin ex credit 17.2. I think another big thing we want to look at is let's go. No production estimate. That's a big one. No production estimate for 2024 given. That's somewhat surprising. Free cash flow coming in as well as it did. Again, the link to this document is on ehack.com with my annotations if you want it. Free cash flow, 2.1 bill. Free cash flow of 2.1 bill in Q4. Q1 usually drops. Okay. Then we have V12, new path in the era of autonomy. R&D expenses, focusing on the next gen platform. I'm going to write this down. Some commenting that next gen investments may lead to basically lower production, so negative, in 2024 versus 2023. Production grew about 37% between 2022 and 2023 for reference. And then, of course, this morning we, let's see here, where were the Tesla update. Yeah, Tesla's Project Redwood. We talked about that this morning. This could be, so I'm going to write down, this could be due to Project Redwood, which we discussed this morning. So we'll link that in here. Boom. Boom. Boom, boom, boom. Great. Okay, 10 minutes to go until the earnings call begins. Again, ehack.com has it all. Okay, good. Next. What else do we want to take out? Oh, let's look at BYD's latest operating margin. I'll just pull that up really quick so you don't have to get investor relations. BYD. Okay, investor engagement. They're always so much harder. You know what? I'm just gonna cheat. BYD Automotive. BYD. Not gaming. I want the ADRs. There we go. Financial analysis. And I'm gonna go to the quarterly here. Okay. This is always so hard. BYD Electronics. Whatever. If I can't get it here in the next couple minutes, we'll look at it a different way. It's these foreign companies always make it harder. Unaudited financial results. Come on. All right, whatever. We'll deal with them later. Last time we looked at BYD, their gross margin was around the 8-ish% range. And now we're sitting at about 8.2 on gross margin for Tesla. So I do think that's good. That's nice. So we found we'll call this an operating margin bottom was Q3 with 7.6% versus 8.2% in Q4. However, solar, we mentioned, still didn't bottom. Oh, and gross margin. Last was 17.9, so still no bottom confirmed there. We'll write that down, still no bottom. And then, of course, solar. Solar bottom. Solar. That would be right here. Solar deploy down another 16%. Another 16%. Minus 26. Q2. Well, I'll put Q3. There we go. Q4. And then we were flat Q2. And negative 33% Q1. So that's been a little bit of a rough ride on solar. However, storage deployments fell in the quarter as well. Look at that. even storage fell. Because storage grew 2.2x. Let's write that down. Storage grew 2.25x in 23, but fell what percentage in Q4? That's not great for Enphase. Although, like, how much pain is already priced into Enphase? I don't know. Who knows? 3202, you dropped 3202 divided by 3980, 19.5%. Boom. In Q4 from Q3. Okay. Then, again, the no production estimate is annoying, as well as this. The the FSD take rate still seems to be very low. Take rate still seems to be quite low, given lower FSD revenue recognition year over year, comparing to FSD beta release in Q4 22. High comp comparison means the take rate has not exceeded the high comp, which was kind of low anyway, right? Like, the take rate back then wasn't that great. So we have not exceeded that. Okay, good. And oh yeah. The Cybertruck production ramp will take time. Slower than usual. Slower Cybertruck ramp than prior models. Okay. What else? 29 billish cash, roughly, rough estimate. Roughly. 29 bill cash versus 24-ish debt payables. So we definitely have some free cash there. It's nice. And we're getting, let's see what they're saying here.
China exports could cut sales to that region by...
Oh, they're talking ASML here. Okay. Superchargers grew 6.3%. That was pretty cool. Write that down. 6.3% growth in supercharging stations. It's pretty good. I think a lot of, almost certainly a lot of stimulus money going into that. Ramp of the Cybertruck to be longer than the others. Oh, same installed capacity. We should mention that. At what point do you think Tesla tries to sell FSD? You mean to other companies? I mean, they can't even get it on the Cybertruck yet, so I don't think we're close. Current installed annual vehicle capacity. Flat. Flat from Q3. 2023. And if we add this up, 100, 550, 950, 375, 250, 125, we get to 2.35 mil. 2.35 mil. That would represent, at max, that would represent, but I don't think we're going to get that many Cybertrucks next year. But anyway, that would represent growth of 1.81, 29.8%. So even if they just adding no additional production, right? Adding no production, just completing what's indicated now as installed capacity. So that's actually good. That's not that bad. So I like to see that. Stock's down almost 4%, by the way, in the after hours. Okay. Yeah, okay. So, earnings call begins shortly. We'll go ahead and get that ready. Let's listen. Oh, they're not up yet. That's fine. We're looking for... Got it. Okay, earnings call ready to go. So that way we can add our commentary as needed. Okay. And then we're going to go make sure Bluetooth is off because Apple sucks. I love Apple, but they also suck. There's their holding music, so you know we're live. Let's go, let's go. Okay, snowballing. Boy. What do we have over here? Model Y production in Berlin continued to grow in Q4, achieving both a record weekly production and sequential increase in total production for the 7th quarter in a row. Shanghai, normal production, rebounding from scheduled downtime in Q3. Okay. Fremont factory produced 560,000 vehicles. Wait. So, keep in mind, here they indicate that the installed capacity for Fremont is 650, right? Fremont indicates installed... Oh, wait. Nope, not yet. Installed capacity at a 650K, but actually did 630K or 530K. So that's a difference that's worth noting, is that those numbers are a little excited, dare I say. Okay, still waiting, still waiting. I'm surprised that. Okay. Usually they want to stream this on X, but I actually have not seen them post this on X yet. See, they got to be using StreamYard. If you go to metkevin.com/StreamYard, you too could sign up for StreamYard and multi-stream to X and YouTube and Twitch all at the same time. But yeah. Got the cyber music going. Still waiting. Yeah, I know. Berlin's sitting at 375 here in production, right? Cyber music is continuing. Generally, they multi-stream this to Twitter, so I'm a little surprised. But then again, they're also usually late. So, not a surprise, but any second now we should have a beginning here. No. Okay, waiting for it, waiting. Bingo card. Not yet. Waiting, waiting. Yeah, get the rum, exactly. Get the Tesla tequila, quick. Oh wait, I drank it all already. Over the last 3 years, I swear. Okay. Let's turn on notifications here. No, nothing yet. Nope. Elon. Oh, there we go. Now they put it on Twitter. I knew they would. I knew it. Just a second ago. Okay, nothing yet. I knew there was no way in heck they were not going to stream this on Twitter. X. Whatever, you know what I mean. So now we're just waiting for it. Yeah. It's kind of exciting. We're going to play bingo. Let me give you all the bingo card. These are the bingo cards. Right here. Call has not started yet. But these are the bingo cards here. Let me hide myself so you can take a screenshot. There you go. Play bingo. Okay, waiting for the call to start. You know, if you take a screenshot, you can kind of play it on your phone too if you wanted to. Still waiting. I just fade it in and out so I don't get in trouble from YouTube. Before the investor call starts, another area of growth that's worth pointing out, the increase in the number of Tesla superchargers. According to Tesla's investor deck, the connectors grew by 29% from a year earlier. Yep. Still got cyber music going. Still waiting.
An EM guy every single day, and we were looking.
Oh, that's CNBC. Cyber music.
Not all the time, all the place. But I guess my point is, and as I talk about this with clients and you look at 2024, it's like, should we own more small caps? And on some level, if you've done that for the last decade.
Small caps. Still waiting. Still waiting. I'll fade in CNBC for a moment.
Interest rates. If you think interest rates are going higher, then small caps aren't going to perform. And, you know, I always point out with the IWM, 40% of those companies are unprofitable. In 1995, I think it was 15% that were unprofitable. So it's a different landscape, and that mirrors what Tim just said, the gross underperformance you've had with IWM. They've become unprofitable companies.
Yeah, I agree. The hold music is actually pretty cool. Like, I would like to hear that in like an elevator or something.
And I'm joined today by Elon Musk, Babe Aftanecha, and a number of other executives. Our Q4 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you. So the Tesla team did an incredible job in 2023. We achieved record production and deliveries of over 1.8 million vehicles, in line with our official guidance. And in Q4, we were producing vehicles at an annualized run rate of almost 2 million cars a year. This was really a phenomenal achievement. Looking at just the Fremont factory alone, we made 560,000 cars. This is a record. In fact, it's the highest output automotive plant in North America. And people are often surprised that the highest output car factory in North America is in the San Francisco Bay Area. It's a little counterintuitive, perhaps. And it's really had an incredibly positive impact on that entire area. What would have been a rundown strip mall is the highest productivity car plant in the Americas. Think about that. It was derelict when we got it, and now it's the most productive plant in this entire part of the world. And it's enriched the community in so many different ways. It's really a gem. So I'm super proud of the people that work there. Model Y became the best-selling vehicle globally, as predicted. The best-selling vehicle of any kind, not just electric vehicles, with over 1.2 million units delivered. The energy storage business delivered nearly 15 gigawatt hours of batteries in 2023 compared to 6.5 gigawatt hours the year before. So tremendous year-over-year growth, triple digits. I think we'll continue to see very strong growth in storage. As predicted, I said for many years that the storage business would grow much faster than the car business, and it is doing that. Free cash flow remains strong at $4.4 billion in 2023, in spite of record spending on future projects. So we had record capex expenses as well as record R&D. This brings us to 2024. There's a lot to look forward to in 2024. Tesla is currently between two major growth waves. We're focused on making sure that our next growth wave, driven by next-gen vehicle, energy storage, full self-driving, and other projects, is executed as well as possible. For full self-driving, we've released version 12, which is a complete architectural rewrite compared to prior versions. This is end-to-end artificial intelligence. So another bit nets, basically photons in and controls out. And it really is quite a profound difference. This is currently just with employees and a few customers, but we will be rolling out to all customers in the U.S. who request full self-driving in the weeks to come. That's over 400,000 vehicles in North America. So this is the first time AI is being used not just for object perception, but for path planning and vehicle controls. We replaced 330,000 lines of C++ code with neural nets. It's really quite remarkable. Sort of as a side note, I think Tesla is probably the most efficient company in the world for AI inference. Out of necessity, we've actually had to be extremely good at getting the most out of hardware, because hardware 3 at this point is several years old. So I think we're quite far ahead of any other company in the world in terms of AI inference efficiency, which is going to be a very important metric in the future in many arenas. So, see, the new Model 3 is now available globally. So we did an updated Model 3. While the car looks similar, a lot of work has gone into the vehicle to make it better in every way. It is significantly quieter, more refined, better equipped, has longer range, and many other improvements. And I recommend taking it for a test drive. If you have not driven a Model 3 in a long time, you should really try the new one. So, steady improvements. And we're very far along on our next generation low-cost vehicle. This is an earnings call, not a product announcement. So there'll no doubt be many questions that try to ask us about new products coming, but we reserve product announcements for product announcements, not earnings calls.
Literally nailed that.
But we're very excited about this, and this is really going to be profound, not just in its design of the vehicle itself, but in the design of the manufacturing system. This is a revolutionary manufacturing system, significant, far more advanced than any other automotive manufacturing system in the world, like by a significant margin. Several years ago, I said perhaps the most important competitive characteristic of Tesla in the future will be manufacturing technology, and you will really see that come to bear with our next-gen vehicle. The first manufacturing location for this will be at our Gigafactory and headquarters in Austin, Texas. And then we'll follow that up with other locations around the world. Probably the factory we'll build in Mexico will be second, and then we'll be looking to identify a third location, perhaps by the end of this year or early next, outside of North America. So, in conclusion, we had a great year with record production, record deliveries, and a strong free cash flow in spite of a very high interest rate environment. And we are focused on exciting new projects that will, I think, ultimately, if we execute on all these things, and it is very hard to do all these things, it's not a sure thing, but I do see a path where Tesla could one day be the most valuable company in the world. I do want to emphasize that is not an easy path, and a very difficult one, but it is now in the set of possible outcomes. And previously, I would not have thought it is in the set of possible outcomes. So, thank you again to all of our investors, our employees, and our suppliers for a strong year, and looking forward to a great 2024 and years to come. Thank you.
Thank you. And our CFO, Vaibhav, have some opening remarks as well.
Thanks, Martin. Good afternoon, everyone. As Elon mentioned, we had a record year in terms of both production and deliveries for our auto business, as well as record deployments in our energy business. This was achieved despite 2023 being a challenging year in terms of higher interest rates and higher inflation. Big thanks to our customer for being with us through this challenging period. I would also like to thank the whole Tesla team for their resolve and dedication throughout. In terms of 2023 financials, we ended the year with over $96 billion of revenue and generated $4.4 billion of free cash flow to end the year with over $29 billion of cash and investments on hand. Our 2023 GAAP net income was impacted by the recognition of one-time non-cash benefit of $5.9 billion from the release of valuation allowance on certain deferred tax assets. This was due to our recent history of sustained profitability and is similar to several other companies who have recently gone through a similar change in their accounting. Accordingly, starting with Q1, our book tax rate will now be more in line with other companies in the S&P 500. In our vehicle business, we continue to see improvements in our per unit cost despite us being in the early phase of Cybertruck ramp. As a result, our auto gross margin improved sequentially. That said, predicting auto gross margins is extremely challenging since there are many moving parts to this equation, some of which are out of our control, like the change in tariffs or local incentives, to name a few. While the teams are focused on cost reductions, we are approaching the limits within our current platforms. On the demand front, as promised, we made investments in digital campaigns in 2023. We fully appreciate the importance of customer education as we are still in a customer acquisition phase. Our data suggests that around 90% of our vehicle buyers in 2023 never owned a Tesla before. We are being creative in figuring out ways to bring in new customers and educate them about the benefits of owning a Tesla versus gas-powered vehicles. The key among them being total cost of ownership. This concept is mostly overlooked for just the upfront cost. We will be rigorous in evaluating our campaigns, curating the content, and optimizing spend accordingly to support the overall demand. There are two additional things I would like to mention as it relates to the US market. First, for customers who qualify for the IRA buyer credit, we now offer that as a point of sale benefit for Model Y, which means an immediate reduction of $7,500 at the time of purchase to the end customer. Secondly, we continue to offer very attractive lease rates for Model 3 and Y using our partner leasing program. Note that the sales under this program are recognized as upfront revenue and reported within automotive sales. Our energy storage business had another record year with deployments more than doubling and revenues increasing by more than 50%. This business is poised to again surpass our auto business in terms of growth rate in 2024. This has been in the works for quite some time, with us laying the foundation a few years back by building our mega factory in Lathrop. I would like to thank the whole Tesla Energy team for their efforts to make this a reality. Our services and others business also started contributing meaningfully to our results and our fleets as our fleet goes, as we expect the fleet-based revenues from supercharging, used cars, and services to continue to increase. For 2024, our focus is to continue growing our output, continuing our cost reduction efforts, and increasing investments in our future growth initiatives. Accordingly, we are currently expecting our capital expenditure for 2024 to be in excess of $10 billion. We believe this would be
2.5 a quarter.
The foundation for the next phase of growth. Once again, I would like to thank everybody at Tesla, our investors, and our suppliers for being with us in this journey. We can open it up to questions, Martin.
Thank you. Let's go through investor questions. Question number one is from Michael. Given that you moved the start of the next generation compact vehicle production to Austin, has the timeline improved so that we might see the next generation platform vehicles in 2025?
I want to certainly say things with they should be taken with a grain of salt. Since I'm often optimistic, I don't want to blow your minds, but I'm often optimistic regarding time. But our current schedule says that we will start production towards the end of 2025, so sometime in the second half. That's just what our current schedule says. There's a lot of new technology, like a tremendous amount of new revolutionary manufacturing technology here. The reason I want to put this new revolutionary manufacturing line at Giga Texas was because we really need the engineers to be living on the line. This is not sort of a off the shelf, just works type of thing. And it's just a lot easier for Tesla engineering to live on the line if it's in Austin versus elsewhere. So, but we are currently expecting to start production second half next year. That will be a challenging production ramp. Like I can emphasize, we'll be sleeping on the line practically. In fact, not practically, we will be.
That was Mikey's bingo card, sleeping on the line.
Confident that once it is going, it will be head and shoulders above any other manufacturing technology that exists anywhere in the world. It's next level. So it's always difficult to predict what that S-curve of manufacturing looks like. So it always starts off real slow, and then it grows exponentially. And predicting that intermediate S-curve is difficult, but So I don't know. It's hard to say what the unit volume would be next year. We're not going to make any predictions on that front, but it does seem quite likely that we will start production next year.
Thank you. The next question is from Michael again. What has been the barrier to ramping 4680 cells into multi-million cells per week rate, and when do you expect to get there? Drew?
Yeah, first, I just want to allay any concerns regarding 4680 limiting the Cybertruck ramp, because I've seen some people commenting about that. To date, 4680 production is ahead of the ramp with actually weeks of finished cell inventory. And the goal is to keep it that way, not only for Cyber, but for our future vehicle programs. And as Elon said, it is an S-curve here too. Like it's hard to predict these things, but I'm just describing our goals.
It's a hard problem. Like,
yeah,
there are entire companies where all they do is make battery cells. That's like all they do.
Indeed, okay. Indeed.
We do a lot of other things, and we got a lot of breakthrough technologies that take time to figure out with 46. It's not just that it's a 46 millimeter diameter by 80 millimeter tall cell. That's just the diameter. That's just the dimensions. Mm-hmm. There's a tremendous amount of new technology in the cell itself
and manufacturing technology.
Yes, exactly.
And just regarding what the team was able to do in Q4, Texas successfully swapped line 1 from the Model Y design of the cell to the Cybertruck design of the cell, which was the 10% cell energy increase I've mentioned before. And as with any major new product introduction, the factory and engineering teams collaborated to ensure quality of the new design and the process changes as their first priority. And now our focus returns to cost and production ramp in Q1. In terms of what we're doing, we're currently running 1 production line, 1 assembly line, using 2 assembly lines in addition for yield and rate improvement trials. And we have a 4th in commissioning, and 4 more will be installed starting in Q3 this year. So definitely this is a big year for ramping 4680.
But we also do want to emphasize that we also expect to ramp orders from our suppliers.
Yep.
So this is not about replacing our suppliers, it's about supplementing our suppliers.
Yes.
So we are very appreciative of our suppliers. Panasonic obviously is our longest supplier. They're an amazing company. We've got CATL, we've got LG, and BYD. Yeah.
Thank you. The next question is from Adam. Should retail shareholders be concerned that Elon has stated that he's uncomfortable expanding AI and robotics at Tesla if he doesn't have 25% of voting?
Here we go.
Yeah, I guess let me explain what my concern is here, which is that I see a path to creating an artificial intelligence and robotics juggernaut of truly immense capability and power. And my concern would be, I don't want to control it, but if I have so little influence over the company at that stage that I could sort of be voted out by some sort of random shareholder advisory firm. We've had a lot of challenges with institutional shareholder services, ISS, I call them ISIS, and Glass Lewis, which there's a lot of activists that basically infiltrate those organizations and have, strange ideas about what should be done. So, so I want to have enough to be influential. If we could do a dual class stock, that would be ideal. I'm not looking for additional economics. I just want to be an effective steward of very powerful technology. The reason I just sort of roughly picked approximately 25% was that's not so much that I can control the company, even if I go bonkers. And if I'm like mad, then they can throw me out. But it's enough that I have a strong influence. That's what I'm aiming for, is a strong influence, but not control. There's some way to achieve that. That would be great.
Thank you. The next question is, what is your expectation for automotive gross margin ex regulatory credits for the full year?
Like I said in my opening remarks, we're focused on reducing the cost of our vehicles. This is very extensive and involved exercise whereby we look at not just the component cost down but down to the packaging used to get the materials to the production floor. Each element of the cost is scrutinized to optimize further. A few pennies saved at the subcomponent level, whether through engineering redesign or from many other things which I mentioned, leads to cost reduction. This is a constant exercise, and we just have to chase down every penny possible. We have a strong team which is hyper-focused on this. However, this is a very difficult thing to predict precisely because there are a lot.
We don't know. We don't have a crystal ball, so it's difficult for us to predict this with precision. If the interest rates come down quickly, I think margins will be good, and if they don't come down quickly, they won't be that good. Yeah. It's always important to remember that the vast majority of people buying a car is about the monthly payment. It's not that people don't want. We have tons of. We have lots of people who want to buy a car but simply cannot afford it. And that as interest rates drop and that monthly payment drops, then they're able to afford it and they buy the car. It's pretty straightforward, and there are no tricks around to get around this.
Okay, thank you. The next question is, does the company anticipate 50% volume CAGR to be realized in either 2024 or 2025? If not, why not?
No.
As we have said in our prior guidance, there will be periods where we won't be growing at the same rate as before. We are between two major growth waves. The first one began with the global expansion of Model 3 and Y. And we believe the next one will be initiated with the next generation platform. In 2024, our volume growth will be lower, as we have said, because we're trying to focus the team on the
lower than what
vehicle.
All right. Thank you very much. The next question is from Michael. When will Tesla start construction on the Giga Nevada expansion and Giga Mexico? And when can we expect each of these to produce their first products, such as 4680 cell, Semi, and the next-gen vehicles?
We have recently broken ground for the next phase of Giga Nevada expansion to incorporate Semi and other projects. But as said earlier, as regarding Mexico, we want to first demonstrate success with the next generation platform in Austin before we start construction. Therefore, we have started the long lead work to get the basics ready and plan to follow our recipe from the 3Y ramp with Shanghai, where we started with learnings from Fremont and ramped really quickly.
Yeah, exactly. It's important to emphasize that, Model 3 production was 3 years of hell. Honestly, before some of the worst years of my life, frankly. I still have mental scar tissue from those 3 years, as do many. But then Model Y was, somewhat of a variant on Model 3, so a much easier situation. And then we were able to actually do slightly improved versions of, in some cases, significantly improved versions of the Model Y production line in Shanghai and Berlin. And that's the right. I think the sensible way to go about things is kind of figure out the core technology of the manufacturing line and then replicate it with improvements throughout the world. So.
Thank you. The next question from Michael is, has there been any progress made with an FSD licensing agreement with another company?
I really think lots of car companies should be asking for FSD licenses, but and we've had some tentative conversations, but I think they don't believe it's real quite yet. I think that will become obvious probably this year.
Yep.
And I do want to emphasize that if I were CEO of another car company, I would definitely be calling Tesla and asking to license Tesla Full Self-Driving technology. It's definitely the smart move.
Thank you. The next question from Siddharth. What is the timeline for Optimus' first production of a volume production line, and what are the barriers to getting there?
Optimus obviously is a very new product, an extremely revolutionary product, and something that I think has the potential to the potential to far exceed the value of everything else at Tesla combined. And when you think of an economy is productivity per capita times capita. But what if there's no limit to capita? There's no limit to the economy. And the technologies the AI technologies we've developed for the car translate quite well to a humanoid robot, because the car is just a robot on four wheels. Tesla is arguably already the biggest robot maker in the world. It's just a four-wheeled robot. So Optimus is a humanoid robot with arms and legs. It's by far the most sophisticated humanoid robot that's being developed anywhere in the world. I think we've got a good chance of shipping some number of Optimus units next year. But like I said, this is a brand new product. A lot of uncertainty is when there's a lot of uncertainty in your uncharted territory. It's obviously impossible to make a precise prediction. But we will be updating the public with progress on Optimus, every few months, and you can see that it's advancing very quickly. I was just in the Optimus lab actually until late last night. I think until like midnight or something. And finally left the Optimus lab. The team's doing amazing work. That's obviously a case where we want to make sure that Optimus is safe, especially at scale, and that it should be impossible for any centralized control to upload malware to a humanoid robot. So we're going to want to build in localized shutoff that cannot be updated from from a central server. That's a case where we really have to give extreme thought to safety. But like I said, I do think it has the potential to be the most valuable product of any kind ever, by far.
Just to comment on the barrier, I think the barrier, and we've talked about this, is like getting it to actually do something useful. Like we can get it to walk around, we can get it to do things, but it's like that utility part.
We can already do some useful things.
But
Ooh,
yeah.
So making millions of these things, it's like utility. Got to get the utility up.
Yeah. A smart robot that can that's capable of doing generalized tasks is what it will be. Yeah. And in terms of doing, moderately specialized tasks, well, it can already do that, and it'll just get better through the course of the year. As we improve the technology in the car, we improve the technology in Optimus at the same time. It runs the same AI inference computer that's on the car. Same training technology. We're really building the future. The Optimus lab looks like the set of Westworld. But admittedly, that was not a super utopian situation.
Yeah, not the best reference.
Yeah, the creators of Westworld, Jonah Nolan, Lisa Joy Nolan, old friends of mine actually, and I invited them to come see the lab. I think they'll come see it hopefully soon. It's pretty wild, especially the sort of subsystem test stands where you've just got like one leg on a test stand, just doing repetitive exercises, and one arm on a test stand. Pretty wild. Yeah.
We're not entering Westworld anytime soon.
Right. Well, we're going to take safety very, very seriously.
Thank you. The next question from Nermin is, how many Cybertruck orders are in the queue, and when do you anticipate to be able to fulfill existing orders?
Yeah, here we go.
First of all, I want to thank all the Cybertruck reservation holders for their patience. The reservation to order conversion rate so far has been very, very encouraging. If the trend continues, as it's very likely to be, we will soon sort out all the builds in 2024. And also, we have new orders come in after the launch. The order numbers keep growing. So we're now all hands on deck, focused on ramping, so we can fulfill all the demands in a reduced wait time.
Yeah, it's important to emphasize that this is very much a production constrained situation, not a demand constrained situation. And we, obviously, we could dramatically raise the price, but that doesn't feel right to us to sort of gouge people for for early delivery. But really the demand is off the hook. As long as the price is affordable, I see us ultimately delivering on the order of something like 250,000 Cybertrucks a year in North America, but maybe more, but give or take, roughly on that time frame. And it sure is a head turner.
Definitely is.
Yeah.
Anywhere you go, people look at you.
Yeah.
They give you thumbs up.
Yeah, it's like finally the future looks like the future. Yep. For the other trucks on the road there, and there's some very good trucks on the road, but if you were to switch out the brand name, you wouldn't hardly know which company made them, but you definitely would know the Cybertruck. That's our best product ever.
All right, thank you. The next question is, can we get Tesla Energy volumes reported in the production and delivery release?
Yeah, we will strive to do so starting from this quarter. And just a brief update from the business perspective. Megapack continues to see strong demand signals globally, driving consistent growth trajectory through 24 and 25. We want to thank all of our partners who've put their trust in the Megapack team to execute on critical infrastructure around the world. And I would like to personally thank the Megapack engineering and production teams for their strong 2023 execution. Lathrop continues to ramp through 2024 with the operation of a second final assembly line to double capacity from 20 to 40 gigawatt hours by the end of the year.
Thank you. And the last investor question is from Siddharth. What are the preliminary results on return on investment of your ads and education campaign? Given that many people still lack awareness that Tesla average price is less than the average non-luxury car price of $45,000, will you expand educational ads?
As Elon mentioned, the ultimate solution to increase EV adoption is really address the affordability issue. But at the same time, we do aware there's an awareness issue as well. So in Q4, we ran a series of digital campaigns, very targeted digital campaigns across different geos and different channels. The target of these tests is really just to drive awareness and ultimately measure the return of investment on those digital channels. And the messaging we're driving is really focused on our product and also try to address some of the misconception of the EV, such as safety, affordability. In one particular awareness campaign we run in Texas, we reached the audience about 10 million unique viewers and generated close to 500,000 visits to our website. A large number of these viewers are first-time visitors to our site. The traffic through these digital channels actually behaved very similar to those organic traffic come to our website. So going forward, we're just going to keep exploring different channels and doing our trials to get a better understanding of this effectiveness of these digital campaigns.
Yeah, but I would also like to caution that we'll be very careful that we don't want to overspend on this side. We want to make sure people are aware, but that's where we'll keep tweaking our methodology about how and where we spend the money, because we understand the importance of increasing awareness, but at the same token, we don't want to spend a lot of money on just creating awareness.
Yeah, there are some geographies where our market share is remarkably low, like Japan, for example. Now, we obviously need to make sure that we have superchargers in the right locations and the service centers are there and the product works well in Japan. But Japan is the third largest car market in the world of any country. So, and we should at least have a market share proportionate to, say, other non-Japanese car makers like Mercedes or BMW, which we do not currently have. So I think that's the case. And when I talk to friends of mine in Japan, they're like, there is like quite a lack of awareness of Tesla. So that's the case where we definitely need to increase awareness in countries and regions where there is not that much awareness.
Thank you. Let's go to analyst questions. The first question comes from Pierre Ferragu from New Street Research.
There he is.
Pierre, go ahead, please. Feel free to unmute.
Pierre fell asleep. He's usually pretty good, too.
Pierre, can you hear us?
Okay. Well, it's really tough to find the unmute button on Teams, guys. I'm sorry for being late. So yes, my question would be, on like the cost reduction. You've talked about it already a lot, and if I look at it over the last 5-6 quarters on average, the COGS per car has been coming down more than 2% sequentially on average. So that means you're on a trajectory of COGS per car going down 10% a year. So that's probably unheard of in the auto industry. I don't think any car manufacturer ever achieved that. But that's very, very mundane and it's a good performance, but it's a very normal performance in a lot of other manufacturing industry like microelectronics or consumer electronics. And so I'd love to hear your thoughts about whether you consider yourself closer to the latter, to a microelectronics business where you have this ability to actually always improve costs, you have more control on how things are pulled together into your fabs, and you see yourself sustainably taking costs down with that kind of pace, or do you think your ability to take down cost is actually going to become more in line with the rest in the industry over time?
Yeah, I think I've covered this in a pretty lengthy detail, even in my opening remarks and in a previous question. But to just further clarify, we are constantly looking for what we can do to reduce costs. And like I said, it's a game of pennies. We've talked about it before as well. And the team is constantly going and checking where can we reduce the cost further. And do I believe that we will have the same pace which you've seen over the past few years? Probably not, because remember, we were coming out with a period wherein commodity prices were rising. So then we did see benefits coming from that. So those are more or less, taken care of. But there is more which we're still chasing. And, I would say a big kudos goes to the team out here at Tesla, both the engineering team as well as the supply chain team, because every time we give them a challenge, they go gangbusters to try and figure out whatever they can to take out further cost. But yes, I would want to caution that do not project the previous cost reduction at the same pace completely in the future, because with our current platform, we are getting to a place wherein, there are limitations.
Yeah, the increased scale also sort of helps us there. As we introduce new products, we have the opportunity to go renegotiate existing suppliers for better pricing. We're looking at every penny, like Vaibhav and Elon mentioned. Just to give you an example, our inbound logistics cost has come down by 22% year over year. And this is because of optimization on using returnable packaging as opposed to cardboard, which is even better for the environment. Optimizing trucking routes, negotiating better pricing with shipping companies, with trucking companies, going with full truckloads, and just doing that sort of. The bigger we become, the more we put thought into these things, and the more efficient we become as a result of it. So those work streams are going to continue.
We are also getting into the tiers of supply chain to see if there are opportunities.
Yeah,
getting into the tier 2s, tier 3, tier 4 levels, and then negotiate those pricing as well to get more efficiency out of the system.
And then on the design side, we're not static, right? Like, especially in areas where the technology is still improving rapidly. Power electronics is a great example. You know, we continue to bring improvements there that are like fundamentals, sort of driven from the device up, that result in cost reductions generation over generation, and they don't only go into the new vehicles; they come to the old vehicles as well. So that's closer to what you were talking about with like the microelectronics space. Some of that exists in the vehicle.
Yeah, certainly our car is more computer than car in many ways, and has a lot of new tech over the last 100 years of automotive production that everyone trying to scrape pennies from.
Oh, we have a crazy amount of computing in our cars compared to anyone else.
Yeah,
it's like orders of magnitude.
And we get to ride that down, right?
Maybe 1,000 times more. I don't know, some nutty number.
I mean, like if I just look at the main microcontroller that makes the motor go, for example, like when I think about what it costs when we stuck it in a Roadster in 2006, and what it costs now, I mean, it's like there's no comparison.
Yeah.
You know, so we've definitely been riding that electronics cost wave.
Yeah.
And then even on the like what you call traditional vehicle side, we do things that no other automakers do to bring costs down through breaking down, you know, the way structures are built and, you know, the way we put our cars together. And I think that mindset that we have is very much closer to the micro processor or power electronics industry than the automotive industry.
Thank you. Pierre, do you have a follow-up?
Great. Yes, a quick one. It's you know, you mentioned this like phase in which you are between two big growth periods. I'd love to hear you about, you know, what you consider the size of your addressable market with the portfolio you have today, like the 3, the Y, the X, and the S. What's your estimate of your addressable market? You're shipping like probably about like a 2 million unit run rate today. And given the price points of these cars, what kind of market share of what you address with these cars do you think you've already achieved today?
I don't know if I actually don't think we have a firm idea of this. It's hard to say exactly.
Yeah, I won't say one way to think about it is look at the automotive industry as well. You know, EVs still contribute a very small market share. So yes, our goal is to try and take as much market share out of that pie. But, you know, do I have a specific number to give you? I don't think we can say that with certainty.
And it's a growing pie as well.
Exactly.
It's like it's 9% today, but it could be 20% in a couple of years or in the future.
Yeah.
And certainly, like the way we've looked at it, and we've always said this, it's not about like, how many EVs can we sell, it's how many great cars you can sell, how many vehicles you can sell. And that market's, you know, 100 million a year. And, you know, we're barely 2% of that. I still think there's 98% more to get. You know?
Yeah, I mean, it's worth noting that if you look at, say, the average selling price of the other top-selling vehicles in the world, they are much lower priced than a Model Y.
Yeah.
So, like Toyota RAV4 or Corolla, Honda Civic, you know, that kind of thing, they're much lower priced than ours. So people are really stretching their wallets to be able to afford a Tesla. It's quite a difficult thing for them to do, and remarkable that it's the best-selling car in unit volume, despite being much more expensive than other high-volume cars.
Thank you. Let's go to the next analyst. The next question comes from Adam Jonas from Morgan Stanley.
Hey, everybody. So I can't wait to see the Optimus Lab. I'm sure everybody on this call feels the same way. Your last AI day, Elon, was September 2022. Can we expect a Tesla AI day this year? It seems like a lot's changed in that realm. And is this year the time?
Yeah, it's a good question. We have found that when we do these AI days, some of our competitors literally look at what we do on a frame-by-frame basis.
They do.
And then we find these things being copied.
Same thing with Battery Day.
Same thing with Battery Day. So we have to be a little cautious about, you know, revealing the exact recipe of the secret sauce. But I think some kind of update would be good to do. I'll talk it over with the team and yeah, I think we might do something later this year. Our main goal with these AI Day things is recruiting. So
yes,
and to sort of change the perception of Tesla as people think of Tesla as a car company when they should be thinking of Tesla as an AI robotics company.
Mm-hmm. Maybe as a follow-up, Elon, I'd love your thoughts on the topic of China-based OEMs expanding into Western markets as the China market kind of gets saturated and there's a tremendous growth in the supply. How much success should Tesla investors allow for this competition to achieve in Western markets? And can you envision a scenario where Tesla could partner with a Chinese OEM to help accelerate sustainable transport in markets like Europe and the United States? Thanks.
Well, our observation is generally that the Chinese car companies are the most competitive car companies in the world. So I think they will have significant success outside of China, depending on what kind of tariffs or trade barriers are established. Frankly, I think if there are not trade barriers established, they will pretty much demolish most other car companies in the world. So they're extremely good. We don't see an obvious opportunity to partner. Certainly we're happy to, except on the supercharger front, we're obviously happy to give any electric car company access to our supercharger network. We're also happy to license full self-driving, perhaps license other technologies, and anything that could be helpful in advancing the sustainable energy revolution.
Thank you. And the next question comes from Dan Levi from Barclays.
Hi, good evening. Thank you for taking the questions. First, I'm wondering if you can just walk through some of the gating factors required to unlock your next-gen platform. You talked about a number of cost initiatives back at the Investor Day a year ago, things in manufacturing and powertrain. Maybe you can just give us a sense of where these initiatives stand. And do you believe it? We know that there's a number of new features and technologies in Cybertruck, things like 48-volt architecture, and really employing your 4680 batteries. To what extent do you think Cybertruck is really a proving ground for the next-gen platform and is really going to be a gating factor to unlocking the cost reductions needed for the next-gen platform?
Yeah, I don't think that anything on Cybertruck should be considered gating for the next gen platform. We're obviously doing a lot of manufacturing innovation, as Elon said, for a next generation vehicle. When you do something at that scale, you have to prove it out. You don't just throw it on the line and just build it. So we're going through those validation phases for all of those new manufacturing technologies now. Sure, 48 volt was definitely something we wanted to carry forward, and it's something we hope the industry adopts as well. We're also open to partnering on that if everyone wants to do that.
Finally, man, the people that really know that this is like the inside baseball thing, but 48, it's so high time that the auto industry moved from 12, the random number of 12 to 48.
Random number of 48.
Yeah, well, it's much less random.
Slightly less random based on human injury, but
dramatically reduces the amount of copper you need in the vehicle, and and also moving to a sort of higher bandwidth communications, sort of Ethernet, level communications versus CAN bus, which is pretty
slow.
So it's really just bringing cars to the
21st century.
Yeah, pretty much.
So like certainly like
it's not exactly. It's like normal for a laptop.
Yeah. Certainly bringing that is an evolution in our architectures of vehicles, but it's not gating by any means. The gating work is just to finish the design and manufacturing of the car, test them out, and get them going.
Yeah, programs in execution mode, right?
Yep.
Right. So it's talking about like tooling lead time, manufacturing
factory lead
time, factory lead time, and executing those programs.
There's a lot of specialized machines that make the machine for our next gen vehicle. So these are not machines you can just order from anyone. They actually, we have to design a machine that has never existed to build a car in a way that has never existed.
Yeah, so you don't just have like a design validation phase, but you have an equipment design validation phase as well.
It does make it very hard to copy us because you have to copy the machine that makes the machine that makes the machine. So,
talk about tiers.
It's not, yeah. It's like, exactly, manufacturing exception. So, I do think it's quite a powerful, sustainable advantage because there just is no place to go to order the machines that make our next-gen car that don't exist.
Great, thank you. As a follow-up, your release does not mention Dojo, so if you could just provide us an update on where Dojo stands and at what point you expect Dojo to be a resource in improving FSD, or do you think that you now have sufficient supply of NVIDIA GPUs needed for the training of the system?
Ooh, here we go.
I mean, the AI hardware question is that is a deep one. So we're obviously hedging our bets here with significant orders of NVIDIA GPUs, or GPUs are the wrong word. There really needs to be. There's no you can't like produce graphics. So that's what, it's not a graphic processing unit, neural net processing unit or something like that. Yeah, GPU is a funny word, like vestigial. And a lot of our progress in self-driving is training limited. Something that's important with training, it's much like a human. The more effort you put into training, the less effort you need in inference. So just like a person, if you train in a subject, it's sort of classic 10,000 hours. The less mental effort it takes to do something. If you remember when you first started to drive, how much of your mental capacity it took to drive, you had to be focused completely on driving. Then after you've been driving for many years, it only takes a little bit of your mind to drive, and you can think about other things and still drive safely. So the more training you do, the more efficient it is at the inference level. So we do need a lot of training. And we're pursuing the dual path of NVIDIA and Dojo. But I would think of Dojo as a long shot. It's a long shot worth taking because the payoff is potentially very high, but it's not something that is a high probability. It's not like a sure thing at all. It's a high risk, high payoff program.
That's interesting.
Dojo is working, and it is doing training jobs. So, and we're scaling it up, and we have plans for Dojo 1.5, Dojo 2, Dojo 3, and whatnot. So, I think it's got potential, but I can't emphasize enough: high risk, high payoff. So, I think it still makes sense given the, even if it's a low probability of success for the very high. I think anyway. I'm belaboring the subject. It's a very interesting program. It has the potential for something special. There's also our inference hardware in the car. So we're now on what's called hardware 4, but it's actually version 2 of the Tesla designed AI inference chip. And we're about to complete design of, the terminology is a bit confusing. We're about to complete design of hardware 5, which is actually version 3 of the Tesla design chip, because the version 1 was Mobileye, version 2 was NVIDIA, and then version 3 was Tesla. So, and we're making gigantic improvements from hardware 3 to 4 to 5. There's a potentially interesting play where when cars are not in use in the future, that the in-car computer can do generalized AI tasks, can run a sort of, GPT-4 or 3 or something like that. if you've got tens of millions of vehicles out there, even in a robotaxi scenario where they're in heavy use, maybe they're used 50 out of 168 hours. That still leaves, well over 100 hours of time available of compute hours. It's possible with the right architectural decisions that Tesla may in the future have more compute than everyone else combined.
Thank you. And the next question comes from Colin Langham from Wells Fargo.
Oh, great. Thanks for taking my questions. As we're thinking about going into 2024, the press release talks about hitting 36,000 or slightly above in Q4. I mean, and the comments in the release talk about approaching the natural limits, and it sounds like you're continuing to try to whittle that away, but that sort of implies there's not much left. In addition, you have the hourly wage increase, I guess, will add to that into next year. And I thought you said raw material costs are kind of, that benefit is sort of almost played out. So is there an opportunity to continue to go below the 36, or should we kind of be modeling that it kind of stays at this level into 24?
We are definitely aware of the cost increases which are coming through because of the wage increases. But like I said, we keep looking at other cost opportunities and try and figure out where else can we cut down. So there is definitely more opportunity to bring down costs further. I won't specifically guide to a number which we will try and get to, but there's definitely more opportunity there.
Yeah, we're chasing lots of cost opportunities on the design side still for 2024. North of 8 figures is what we're worth of, just in my organization, and Lars has got a bunch. And then from a commodities perspective, it's such a long cycle time through the whole material supply chain that even with what we've already seen to this point, there's more to come on commodities reductions.
And there's still some tailwind left on the commodities.
That's what I mean, yeah.
And aluminum and steel.
Yeah.
And battery materials.
It boggles my mind to think that if we make a 1% improvement in costs, that's $1 billion.
Yeah. Yeah.
So it's like, on average, if we reduce the cost by 1 penny, $1 billion. What? And we started off, wasn't that long ago, that we're only making like 10 cars a week. Yeah. So where does it lead ultimately? With good execution, like I said, it's not a slam dunk, but with, if we execute very well, I think Tesla could be the most valuable company in the world.
Thank you. Colin, do you have a follow-up question?
Yeah, just a quick follow-up. In the commentary, you mentioned the taxes would go to the S&P 500 level. I think you've been trending slightly below 10%. S&P, I think, is typically 25%-ish. Is that going to, should we expect that to jump right up next year when we're modeling next year? Or would it be like a gradual change over the next few years? And any cash impact from that tax change as well that we should be considering?
Yeah, so there's no impact on cash taxes from the release of the valuation allowance, which I spoke about. What it does is it's how you account for taxes on your books. So it's basically an accounting change, wherein there are certain jurisdictions, because we had enough NOLs, etc., wherein we didn't have to accrue book taxes. Now that the valuation allowance has been released, and we have recognized deferred tax assets on the books, that means your tax rate immediately goes up.
Okay. I think that's all the time we have for today. Thank you so much for all of your questions, and we'll speak to you again in 3 months. Thank you. Bye-bye.
Thank you.
Okay, Wow, I was not expecting that to cut off like that. That was not great timing. But I want to do a summary here, obviously, as we always do. So let's do a summary of all of that. So company's down 5% right now, and we're going to do a full summary, which we've got summary posted over at ehack.com as usual, but I want to give a summary of everything, including some of my thoughts. So let's get into the usual. Okay, so let's see here. Good. Okay, wow, that was unexpected, but okay, very well. That cut off so fast. So, here we go. Wow, we actually got a bingo this time. In fact, we got bingo twice. Now, we'll go through everything that was just said in the Tesla earnings report, the Tesla earnings call. We'll talk about the good, the bad, and, well, let's just get right into it, okay? First things first, when it comes to earnings, yeah, they missed, okay? Tesla's missed 6 out of the last 8 times, so making the bet that Tesla's probably not going to do super well was probably the right bet. In fact, it is probably why the stock basically sold off going into earnings in the first place. At the time of recording this, in the post-market, it is down 5%, and our next fib retracement does leave us with 175 in sight, which isn't great. We're looking like we're going to open below 200 tomorrow, so you're below a psychological threshold. Will that lead people to buy the dip? Who knows? We'll find out. But what were the numbers? Well, again, adjusted EPS missed by 2 cents, coming in at 71 cents versus 73. Free cash flow beats at 2.06 billion versus the 1.45 expected. Gross margin missed with 17.6% versus the 18.1% expected. And X credits, we came in at 17.2%. We've got this summary over here at eHack. I will say there is still no bottom in a margin. It is worth noting that production costs came down 3.2% from the last quarter. We've been seeing price declines come down, but it's worth balancing those price declines with the fact that lithium prices have been plummeting, which is good, but, that's just one component here, and we want to potentially see lithium prices come back down or continue to come down. But we also want to see cost savings in other areas, which we are seeing, and is probably why we've been seeing these cost declines here. Really, it's a way of saying, hey, there's deflation in manufacturing, whether that's coming from innovation or that's coming from cheaper commodity prices, or it's coming from both. For example, going to a 48-volt architecture system and the massive reduction in need to use copper is one of the ways that you could actually save money. However, we are coming to a limit in terms of how much of a reduction you could actually get or expect from Tesla's production costs. We're coming up to about a $36,000 cost per vehicle. Tesla calls that a limit, so imagine that as sort of this line that's hitting this $36,000 limit. The analysts and executives in the calls did sort of indicate that, there's still more we can do. Don't worry. I'm not sure if they were just saying that because they're sad the stock is down. Keep in mind this full update totally for free over on ehack.com. And we also have a big house hack update that's out. So when you're done watching this, go check out that house hack update. A little scary, but also exciting when it comes to the real estate market. Anyway, no production estimate given for 2024. This is in the bingo card and in the actual call. We got nothing. Bingo card, earnings call, nothing. The only thing we heard is that production would be lower for 2024, but we didn't hear how much lower, just lower, which is interesting and kind of annoying that we had no guidance at all. Some of the comments regarding, or some people were commenting that the next generation investments could be why production might actually maybe even go as far as negative, below the 1.1 million vehicles per year. I don't think that's true. Elon did make it clear that Q4 is growing production at a rate close to 2 million. But then again, close to, I guess 1.8 is close to 2 million. But Elon did start off by saying that, hey, we're close to 2 mil. He's very, very excited about the next-gen platform, calls it a remarkable revolution in manufacturing, one that will be first tested out in Giga Mexico. However, they won't conduct any product announcements here, and then they will only build Giga Mexico after they tested out the manufacturing in Giga Texas, which means you're going to have the manufacturing line tested out Giga Texas probably late 25. Then in 2026, you'll probably get to Giga Mexico, and we'll probably announce a third Giga location for the next-gen platform at the end of 2024 or early 2025, which really means for us to actually price in the next-generation model, we're probably looking at mid this year before you actually start pricing that in. Stock market usually tries to price about 18 months ahead. So 18 months ahead does put us at about June, July before we start pricing in the next generation platform. The ramp of the Cybertruck is expected to be longer and slower than other models. The Model 3 being 3-year hell, as Elon says, with the Model Y being slightly easier since it borrowed a lot from the Model 3. No mention on the earnings call of solar deployment. Those solar deployments substantially negative, 33% to the negative in Q1 of 2023. Flat Q2, negative 26% Q3. Those are all sequentially, mind you, which is not great. Another 16% down in Q4. Operating margin appears to have bottomed at 7.6%, now up at 8.2%. Storage grew 2.25 times in 2023, but did fall to 19.5%, or did fall 19.5% in Q4 from Q3. So some kind of sequential slowdown there in solar and batteries. Not great in the near term for Enphase. Roughly $29 billion of cash, 24-ish billion in debt/payables, 6.3% growth in superchargers quarter over quarter. Installed vehicle capacity is flat at about 2.35 million. So it looks like we'll probably be producing slightly below the installed capacity. Other things that we are looking at is basically saying, look, we can't predict what gross margins are going to do. The company's obviously still got pretty good gross margins at 17.2% ex credits. That's pretty remarkable. But without that real growth, which they say is really driven by interest rates, it's hard to say what margins are going to do. Elon says if rates come down quickly, margins will go up. If rates come down slowly, margins won't go up as fast. Pretty straightforward. Shows you that Tesla is an interest rate sensitive company. In my opinion, that can still mean recession resilient, but not interest rate resilient. Very big distinction. That's very important. Company talking about being between two major growth waves, essentially a way of saying, hey, we're going to be at a little slower period of growth. That is, we may have been growing at 40 to 50%, then we hit a little bit of a trough, and that's hoping to set up for the next S-curve. Actually downplayed Optimus here. I was pretty surprised, not Optimus, Dojo was downplayed. I was pretty surprised with how much Elon Musk downplayed Dojo. He called it a high potential, high risk, a project that has potential, but that is high risk, high payoff, and that it's potentially a long shot without a high probability of actually occurring. This is why they're undergoing with a dual path approach to figuring out artificial intelligence, which is basically a way of saying, like, we're all in on NVIDIA while at the same time all in on Dojo at the same time. Interesting way to put it, and I do think that downplays Dojo quite a bit more than I expected. They are about to complete version 3 of Tesla's hardware. That, worth noting, is that's actually hardware 5. That's because they started with Mobileye, then NVIDIA, and then 3 versions of Tesla hardware. They are not seeing any interest in other companies in the scope of full self-driving licensing. Even though Elon's open to that, we're not seeing anybody actually bite on it. He seems to think that other people don't think it's real yet, which I agree. That's why I think they ought to, consider advertising how beautiful that full self-driving is, but they might get in trouble with the regulators if they do that. Lathrop facility is adding another production line, expected to double its capacity for battery packs from 20 gigawatt hours to 40. Inbound logistic costs are coming down. They're optimizing and negotiating On advertising, they have run digital targeted campaigns to drive awareness, education. However, the biggest issue they still see is affordability. They are trying to address misconceptions of EVs on safety and affordability, but everything ultimately comes down to price, and they don't want to overspend on advertising. By the way, if I haven't made it clear yet, I'm back to doing Stock Market Open live streams. They're just on a different channel. They're on the Meet Kevin Market Open live stream channel. It's linked down below. If you hit notifications on that or just subscribe to it, you'll just see it every morning. The market's open at 5:25 a.m. And then, of course, this complete summary, including our bingo card, is available at ehack.com. You'll see the link down here. You'll see the video stream with all the live information. And you'll also be able to scroll through and see some other updates here from Employees Let Go, eHack, Red Sea Talk, Taylor Swift, whatever, ASML, Texas Instruments, some cool information here on ehack.com, totally for free, totally a free service, for free forever. Well, some of the things that I was surprised that did not get mentioned, I was surprised we didn't, I wasn't really surprised we didn't get anything on Uber or a van, but I was surprised that we did not get any Red Sea commentary. We did get bingo twice, boom, boom. Elon did walk back the 25% stock comp. He mentioned, this is not to get economical 25% control. It's simply he wants more voting control. And he thinks he can accomplish this with a dual class share. That he believes Tesla is on the path to creating an AI and robotics juggernaut. And he doesn't want to control it, but he also doesn't want so little influence that I could be voted out by some random shareholder, he argues. So we did not see any comments on a solar bottom, no talk about a van or Uber, no talk about further price cuts, nominal talk about the charging network, so I left that one unchecked. No production numbers, which was really surprising. No union talk, no audible puff of a joint, no mention of digging our own grave, no mention about crypto, no mention of Earth as a market, no whatever frameworks over here. No insulting an analyst. Some of these things were slightly, DEI wasn't mentioned. Some of these may have been mentioned, but would have been relatively nominal. I can't remember if he mentioned production is hard or some of these. So it's possible that some of these others I wasn't paying attention to as much. But anyway, the ones that were very clear, of course, they have an excess supply of 4680s. This was very interesting. Plenty of 4680s, and they think they're going to sell out Cybertrucks for 2024 based on how many people are converting off the wait list. Obviously, there's a loss in that, but they think they're going to do eventually up to 250,000 Cybertrucks a year. They did not give a production target for how many they produced last year or how many they're looking for this year. They did mention twice the most valuable company in the world comment. Interest rates were complained about. Project Redwood was talked about. AI Day was briefly talked about, although Elon was a little bit concerned that other companies are just copying everything that they're doing. So, as far as the actual stock, well, I mean, not a surprise. The sucker's down, it missed. This is what's supposed to happen in earnings. The company, the stock is not as down as much as I thought it would have been, though who knows? Sometimes after these calls are done, it plummets even more. They did talk about how Optimus is extremely revolutionary, but some of the executives sort of argued like, hey, well, you know, does it do anything useful? And there was like a little bit of a back and forth there between the execs and Elon, where Elon's like, yeah, it already does useful stuff. Yeah, stock almost down 6% now. So you are getting a bleed. The implied volatility was 6%. So we'll see if how puts end up printing tomorrow, if they do at all, since we're not past 6% yet. The stock could end up falling more tomorrow. Who knows? I do think on a technical basis, with this bad news out of the way, I do think that 175 is a pretty safe floor. No guarantees, but I've been very clear that when we failed this breakout here and earnings were coming up, 175, well, 221 was easy, but 175 was a possibility. And so we are on a nasty downtrend right now. So you do have some potential near-term pain. However, I do think, as usual after earnings, you get a few days of down, and then you do potentially have the opportunity for Tesla to play some catch-up to the market essentially being at all-time highs. Look at how different those stock charts are. That's the NASDAQ for you. That's Tesla. Pretty embarrassing. Tesla stuck in that wedge there. But it is an interest rate-sensitive stock whereas companies propping up the NASDAQ right now, like NVIDIA, are anything but interest rate sensitive. In fact, Tesla's OPEX spending is heavily going into a company like NVIDIA. I think if anything here, this Tesla earnings call reiterated what we have on NVIDIA's dominance in AI. The fact that Elon downplayed Dojo is, quite frankly, one of the strongest pushes you could see for NVIDIA. Like, Elon basically just handed a win to NVIDIA there. So I have to give NVIDIA a big high five on that one. So I'm still personally of this dual track mindset where you can have chip exposure. That's not personal financial advice, obviously, but chip exposure. That's NVIDIA, AMD, ASML, Intel, TSM. You get your chip exposure, and then potentially you equal weight that with energy and Tesla. So that might be like an Enphase and Tesla. Those two are your anchors right now. Once those two rally, that's a good looking portfolio. But right now you've got one that's crushing it, one that's sucking, kind of hurting the portfolio a little bit. But I think it's just a matter of time of when interest rates go down where you get the whoosh, slingshot. Even if you get a correction on chips, you get that slingshot on energy that creates a pretty good looking portfolio. The question is, when is the time to enter those? And quite frankly, nobody knows. Anyway, with that said, make sure you go to ehack.com to read the full summary and all of the other news that we've got, and go check out the update that we posted at the Househack YouTube channel or Househack Twitter. You'd also follow me on Twitter at RealMeatKevin or Househack Homes on YouTube or Twitter X, whatever. And to see the full update of what my startup is doing, how we probably doubled the valuation of the company, next fundraising updates, and more. Thanks so much for watching, and we'll see you in the next one. Good luck and goodbye.